Okay. Good afternoon. I'm Sherry. I'm your host for today's Traders exclusive webinar. It is our top traders are going to share their strategies for the rest of June. And we have Dr. Adrian Mance, we have Jason Allen, we have Matt Brown, and we have Simon Joseph. And we'd like for you to please check out our website, tradersexclusive.com. It's where we regularly post articles and video clips with valuable trading tips and techniques. This is also where you'll find the recording for today's webinar. And before we get started, I'd like to share a quick disclaimer. You should, let's see, I need to come here. In order to simplify the computations and commissions and other costs that may not be included in the examples used in this presentation, these costs will impact the outcome of stocks and option transactions and should be considered. Investors considering options should consult their tax advisor as to how taxes may affect the outcome of contemplated options transactions. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. Options involve risks and are not suitable for all investors. Prior to buying or selling an option, a person must receive a copy of Characteristics and Risks of Standardized Options, the ODD. Copies of the ODD are available from your broker, and you can get it by calling 888 Options or from the Options Clearing Corporation in Chicago. The information in this presentation is provided solely for general education and information purposes, and therefore should not be considered complete, precise, or current. No statement should be construed as a recommendation to buy or sell a security or to provide investment advice. Past performance does not guarantee future results. This presentation features independent third-party presenters. Traders Exclusive does not necessarily agree with the views of these presenters. Traders Exclusive does not guarantee, warrant, or condone the information, methodologies, or trading styles of any presenters in this webinar. In other words, you need to do your due diligence. So first off for today, please hold all of your questions until after each presenter has finished, and then we will take questions for them. I'm going to now introduce to you Dr. Adrian Mance of TraderInsights.com, TraderInsight.com. He's going to be giving us a presentation called My Top Trading Strategies During the COVID Chaos. He's been a professional equities trader since 1997. He developed a trading style based on statistical, technical, and fundamental analyses in the planning of every trade and has found methods to extract the most out of every setup every day. He's the author of 2 books on the subject. He's been featured in many leading industry publications, including Stocks and Commodities, Stocks, Futures, Options, Active Trader, Traders, and Moneymaker. He publishes the Daily Income Trading Plan, a nightly blueprint for actions he plans to take in the markets on the following day. And welcome, Adrian. Let's see if we can hear you now.
Hi, Sherry.
Hi, thank you for joining.
I am here.
And I need to give you...
My pleasure.
There we go. Now you should have it. Control of the screen to give us your presentation.
There we go. All right, do we see the screen?
Yes, we can.
Okay. All right, you guys. So thank you for the introduction, and let me just begin by introducing us and who we are. So as Sherry said, I'm Adrian Mance. I've been trading since 1997. Been trading in our own account. That's Julie and I have been trading together since we were in graduate school, and that's us there. And so we developed a strategy that is primarily based on trading equities, trading stocks. Over the course of the trading day, our focus is primarily on the first hour and sometimes on the last hour of the session. We try to make sure that we participate in the open. A lot of the strategies that we designed were put together for some hedge fund stuff that we were involved with. And, basically, it's all an outgrowth of work that we did in graduate school when we were working on our MBAs and PhDs, and we put together this big multivariate model of how markets work and what happens in markets, and then how to go through and anticipate order flow, figure out sort of where things are most likely to go in the very short term, right? We are in and out several times in the first hour of the trading day. We'll trade as many as 10 to 15 stocks over the course of the first hour of the day. Everything that we do is planned ahead of time. It's planned the night before. So it's a little bit different than sort of the discretionary trading that some of you might be familiar with. But everything's based on levels and thresholds that we feel are going to be trigger points for program trades, trigger points for sort of the crowd trading out there, for the broader retail bunch. But everything is based on a bunch of statistical process controls, as I said, that we put together over 20 years ago, so almost 23, 24 years ago now. So I've published a bunch over the years. Everything that we do is very transparent. We don't do any black box kind of systems. We do quite a bit of teaching. As I said, we're both PhDs. That's what you do when you're a PhD. You wanted to go out there and teach something, and then we got stuck a few years into this business saying, well, how do we apply this in a way that we can show other people some interesting stuff the same way that we would if we were teaching at a university? And this is it. We publish quite a bit. We do a lot of live lecturing. A lot of you guys have seen us on the speaking circuit. We do a lot of live trading in front of audiences, all that kind of stuff, and it's fun. So we've had a lot of fun with this over the years. In addition to all the journals and periodicals that we publish in, these are the books that I've got out there. Around the Horn, A Trader's Guide to Consistently Scoring in the Markets. That was the one that started it. I originally wrote that in grad school. That was it was entitled A Multivariate Analysis of Covariance in the U.S. Equities Markets. And George Stillwell of Stillwell and Company Publishing, the guy who published it originally, famously said to me, how many copies of this thing do you think your mother's going to buy? Because with a title like that, we're not going to sell much. And we reworked it all around a stock trading metaphor or a baseball metaphor for stock trading. And, the book really was the foundation of sort of the trading that we do every day. It's not in print right now. It'll be back in print the beginning of next year. Will be a new edition of it. You don't need to buy any of these books. You can find all this stuff at traderinsight.com. I'll give you guys a link at the end here, where you can sort of dig in and have a look at what we do and look over our shoulder every day as we're trading. So we do a lot of live trading in front of people, sort of demoing the types of strategies and analyses that we work with. So with that said, right, that's sort of the background. That's where we came from. Obviously, we came from a research kind of a background, and we are both psychologists. And I will tell you that, trading, as far as we are concerned, is definitely a combination of strategy and discipline and psychology. And what most of you tend to let go in this equation is the psychology part of it. And you just sort of think that if you find a profitable trading strategy, gee, if I can get in front of a strategy that consistently books profits, then it's going to be fine for my psychology, because my psychology is I want to make some money. And, that's going to be my comfort zone. And as soon as I'm making money, boy, I'm going to be off to the races. And I can tell you that is not true. Doesn't happen that way. What we've seen, we work with about 40 new students a year. We do these income trading boot camps, and we have 600 applicants for these things. And the way that we parse through this stuff is we try to get a grip on what the psychology is of the person who's applying to do this. Because if your way of looking at the markets, or if your relationship with money, your relationship with risk, the style of work that you enjoy, or the style of work that you want to be involved with, doesn't overlap with mine, if it's not sort of confluent with the way that I see these things, then it's going to be a problem, right? It's going to be hard for you to learn how to do what I'm doing. And it's also very hard for people when they don't have a good grip on themselves, right? Because you introduce all sorts of stuff into your trading every day. I'm sure when you look back on charts, you have frequently said, boy, how did I miss that? That just jumps right out at me right now. That's so obvious. And you wind up really kicking yourself. Well, the reason that you didn't take it at that time was it was creating psychological discomfort for you instead of being in your comfort zone. So that's a big part of what we tell people is, this is one of my favorite quotes, is Bernard Baruch. He says, get to know yourself, know your own failings, passions, and prejudices so you can separate them from what you see. And that's a very important quote. This is also the fellow who said that successful speculation is the art of anticipating the anticipators. So, back in 1900, it was obvious to this person that, psychology is as big a part of trading as strategy is. And I think if you keep that in mind and you sort of bear that in mind as we're going through this presentation today and what I'm talking about and how I trade the market in particular, this is going to be a look at how I trade Apple every day. Then, ask yourself, is this something that is in my comfort zone? Does this make sense to me? And before you go and apply it, right, I tell everybody, go simulate first, see if the simulation is comfortable, work your way through a strategy, see does it make sense to you? Is it something that causes you anxiety, right? And is that anxiety something that you can deal with? Is it something you can put aside, or is it something that you have to say, I have to move on and try a different strategy? So that's super important in everything that you're going to do as a trader, and it's going to be very important in getting you profitable. So with that, let me tell you what we're going to talk about here. Over the course of the COVID-19 lockdown, what has happened in our trading is that a lot of the strategies that we usually work with would just come in the morning and blow out. So you wouldn't get triggers. So we plan a bunch of trades, and then you get up in the morning and you've got your roadmap, right? We have our NYSE trades. We trade, we sort of focus by exchange on what it is that we're going to be doing over the course of the day. And, we would get up and we'd have trades planned for our around the horn trading plan, which is, like I said, NYSE listed securities. They're all very big stocks. And we get up and everything gapped 600 points, 800 points, one direction, the other direction, right? And every morning you would get up and what you planned for the night before just wasn't going to happen. Same thing with, if you followed our work over the years, we have a very significant strategy that deals with opening gaps. Well, when the entire market is gapping 600 points, 700 points, when VIX is out in the 80s like it was, makes it very difficult then to go and find 2 standard deviation of volatility opening gaps in stocks and trade them consistently, right? So a lot of the strategies that we had were sort of put on the back burner, and this was the strategy that just, percolated to the top. This is one that we trade all the time, but over the course of the last 3 months, 4 months, it has been definitely the front runner in terms of how we're earning our income, earning our keep around here. So participating in the open, trading NASDAQ supercaps, this is going to rely in large part on, you need to know your stocks. And when we create the short list of stocks that we're going to trade, this is different from the around the horn stuff. We focus on NASDAQ. Again, I trade stocks. I know a lot of you guys are options traders. You make your home where you make your home. My comfort zone is trading equities. So please don't somebody ask me, why not options? Why not futures? Because somebody always asks, and my answer is not going to be very satisfying for you. It's going to be because this is what I've always traded. This is what I'm comfortable trading. This is where I've made my living since 1997. I make a short list of stocks. I go into the NASDAQ. I want to see things that are trading greater than $100 per share. I want to see travel range of $2 or more over the course of a session. I want to see volume on the high side, over 6 million shares per day. And if I'm going to trade the stock around the opening bell, I want to see a spread that's less than 10 cents. That's a rule of thumb. But some of the stocks that we trade Tesla, we trade Baba. Those things don't really settle into a tradable spread until a little bit later in the session. So For the opening trade, what I want to see is a stock that's as active in the pre-market as many other stocks are during the trading day. And this is where Apple has come to be sort of our primary focus. When we do this trade, I want to say that it's, in my head, it's sort of a very simple trade. In a lot of people's minds, this is probably the most complicated trade that I teach them how to do, because this requires you to have a feel for what's going on in the market. It requires you to go and really have the courage of your convictions, because what you're doing is you're isolating the volatility. You're just going through, and on a 5-minute chart, I'm going to show you exactly how I do these. You're going to find the areas that very, very clearly constrain volatility. And the only indicator that I use is a horizontal line tool, and I draw what I call volatility bands at each major price inflection. And then I confirm that those price inflections are significant by looking at the volatility band and seeing, does price inflect there? What's volume by time look like there? What does volume by price look like at that point? And when all these things line up, that gives me then a band that I'm going to trade. So really, you're going to isolate these visual ranges, and then you want to go through and find that there's lots of peak to trough support and resistance. You want to see price bouncing around. You want to see evidence of program trades. And for tomorrow's trading, in the case of something like Apple, what I'm generally going to do is I'm going to bias my trades for the following session based on what the open to close bias of today's trading was. So for tomorrow, if Apple had an open in the bottom of the range and a close in the top of the range, I'm going to be looking at it primarily with a long bias. If it opened in the top and closed in the bottom, then I'm going to shift my bias to the short side. I watch pre-market trades. I want to see how do they relate to the volatility bands that I drew the day before. And then, I'm going to have a directional bias from the first violated band, and I'm going to target the next band up or down. And then I just try to trail the prior band as we start moving through price. So it's a simple strategy, but it's one that you're going to have to wrap your head around, and you do need to get a very good feel for price action. So let's take a look at volatility bands. As I said, we trade these: Apple, BABA, Netflix, NVIDIA, Tesla, right? These are all on our list every day. And this is a chart of Apple. So this is from a couple days ago. And I'm going to show you the last 3 days of how these set up and how they play it out. But you can see here that what I do is pretty simple. So I'm just dragging this line up a chart. This is Realtick, is the trading software that I use. I'm just dragging that line up the chart and trying to identify where are there a bunch of overlapping highs, lows, opens, closes, right? I want to see sort of that classic inflection on the 5-minute chart. I trade from a 5-minute chart, so 5-minute chart is where I'm looking for these opportunities. I go through, and once I've identified them all, then the next step here is just for me to put the plot together for the next trading day, and I've got all those levels isolated now. So my intention for tomorrow on 6/12 here is to go through and sort of trade these points as they become tested again. So sometimes our targets on these are $1. Sometimes our targets on these are 60 cents. This morning, for those of you who are here from Trader Insight, you guys know from the first hour trading pit, I talk my guys through the trades. I talk them through exactly what we're going to be doing before we do it, right? Entry, target, stop. And you can see what I've done when I put the bands together is I've confirmed that each one of those bands also has volume by price out there on the right side of the chart where that red box is. All those levels are telling me that those zones of volatility that I've isolated are actually places that something has happened that's happening that's discrete when compared to the rest of what's going on the chart. So I'm pretty confident on 6/12 that I've put together a good trading plan for the next day. And this is what the trading plan itself looks like. All you guys who are here today, I'm going to give you a thing at the end. You can just text trial to the phone number, and you guys can try all of our trading plans free for 30 days. There's no credit card, no nothing. My bias is If you decide you want to work with us, you'll let us know. And if you don't, it's probably because it's not a good psychological fit. But what you want to do is you want to map the volatility. So I put together a trading plan. I plan the trade. I trade the plan. All of those levels from that chart are then transferred to a hierarchy of volatility bands. And I also look at, are those bands going to be confluent with something else that represents a place that price is likely to inflect? So if you're following the market and you've been watching charts for any length of time, then you know that floor trader pivots are another one of those things that people tend to focus on. Here's another indicator that's included free in just about every piece of charting software. And just by turning it on, what you give yourself is huge insight into where things are likely to happen. There's a lot of people who trade from pivots. Those volatility bands, those represent now program trading numbers. That's why price is bouncing around in those ranges. Programs are hitting the tape right there. And over the course of the day on the 12th, those were the places that isolated that trading activity, right? Those are where the program trades were picking it up. You can see it as it happens on the chart. You can watch and you can see price as it comes into those bands. You can see the ticker accelerating. You can see the programs kicking in. You can see retail traders kicking in. I mean, this is not rocket science. This is basic human psychology of programs are set up by humans, and humans see things as they're represented visually. And that's a very good way for you to go through and isolate this stuff yourself. So all these visual cues get you in front of opportunity over the course of every trading day. So here is the open on the 15th. So on June 15th, this right here is the pre-market. So in Realtek, I plot this back to the pre-market, right? Back to where all you have is a bunch of ADF trades. You've got alternative display facility trades going off back there at 4 a.m. all the way up until 9:30. And really, right, the area that I'm most focused on is right here in this red box. This is where trading starts getting pretty liquid in Apple. The spreads are tightening up. Things are starting to make sense in the same way that they would during the trading day. And what I'm going to do with this opening information is it gives me some additional bands. So with the pre-market trades in place, I've got additional bands 333.10 down to 31 spot 97, down to 30 spot 78, right? Those are additional bands that I've drawn. But the most important one here for this open is 333.10 because you can see that it really constrained volatility prior to the opening bell. And that gives us then an indication of where I'm going to place my first trade. So this is something that I've been doing for a very long time, is basing the first trade on a bounce of what was happening in the pre-market. And you can see it happen right there. So the first trade of the day was 333.10 up to 334.28. Why did we get out at 4 spot 28? Because that's where price had inflected in the pre-market. I don't care that it went to 5 spot 61. The most important thing to me is that I've got the trade bracketed up in a way that I am automatically getting in and out of that trade at levels that I've predetermined. Then once I see that it's hit 5 spot 61, my next target on the inflection from 3 spot 10 is up to that 5 spot 61 level. Again, I'm getting out earlier than the ultimate extension here, but I don't care, because what I'm doing is I'm just always identifying where those inflections are and using the inflections to time subsequent trades. So this is sort of the bread and butter strategy. This is a simplified view of this thing, but it really is what we're doing. And I'm going to show you some more examples here, but just bear in mind, you can see 1, 2, 3, 4 trades on this particular morning. And by 10:30, we're usually done with Apple. So it's a first hour trade. A lot of our trades end in the first hour. Sometimes we'll go to 11, but most of the time we're out here on the West Coast. And, I can tell you from lovely Pacific Palisades, California, that by 10:30 Eastern, quite frequently we're beat, right? Because we get up at 5:30 in the morning to get ready for trading. So the next thing I want to look at is, well, what do you do if you planned all those trades, if you planned all those levels that you thought were a sure thing for the following day, and then the stock gaps? So there's a lot of money to be made even in a gap environment if what you do is focus on what's happening in that pre-market. So here you see it, the open of trading winds up gapping way up on this day. You had to close the prior session down around 343 or so, and then the next morning you're gapping all the way up into 352. And by taking that pre-market data and isolating again where the volatility is, you get a whole other set of bands. So now I've got all these opportunities lined up for this trading day on the 16th here, where instead of saying, well, it gapped past my planned entries, now I've got nothing to do, I've got plenty to do this morning. And it's pretty easy, right, to identify where the significant activity is going into the opening bell. So in this case, we have this consolidation between 349.26 and 9 spot 92. So my very first trade of the day is going to be on a retest of that level. So I'm not looking at that last big move up into the high at 2 spot 48. I'm most interested in what happened just before that, because it tells me that I've got the potential for a pretty big upside move. And you see that right on the opening bell, by having a resting order sitting there at 9 spot 26, right? I've got the opportunity when price comes down, because it opened higher, I've got the opportunity to get back into this one, and I just take it right up into those lows of that next area of support and resistance there. So 9 spot 26 up to 0 spot 69, right? A nice first trade. 350.69 is the exit on that one. Then when price gets up above the line and gets into the next range, 350.69, comes back down, tests that line, that gives me an entry, that gives me a run up to 352.48. So this is today's trading here. And in today's session, you can see this was a much more, those dots are the actual real tick executions. So what I'm showing you here is what we were looking at today in the first hour trading pit with our guys. So, of the people who we've worked with in the last 6-7 years, I will tell you the beauty is they're all still with us, right? We trade together in the morning. On any given day, there's 50, 60 boot camp alumni who are in there trading with us. We all trade for a living. This is what we're doing, and this is what it looks like on what I will call a hyperactive almost trading day. So you can see I've got more than the usual number of trades here. And it's because of the way that the volatility was isolated from yesterday's trading plan as well as from today's pre-market activity. So you can see that the first trade of the day, although that looks like a short, when this trade was going off, it was a long, and it was from 354.32 back up to 354.81. Would have been a beautiful short sale from that pivot. Would have been 355.28. Hindsight's always 20/20. Coulda, woulda, shoulda, right? But it's not my thing. Like, what I'm doing is I'm trapping. There was an article written about me many years ago, hunters versus trappers, and Adrian is definitely a trapper. The trade has to come to me. I'm waiting for a price to print based on something I planned yesterday or in the pre-market. And in this case, my first trade was when price comes down, right, I'm going to take that entry when it comes back up through that 354.32 line. I take that entry, goes up to 354.81, and then it goes all the way down to 353.63. And at that point, all I'm doing is resetting and looking for the next opportunity. And in this case, 354.32 up to 56. So you guys who were watching this morning know we were taking some smaller trades. And by watching the tape and by sort of staying aware of what we teach you guys and what we've always been focused on, what we saw was there was lots of overhead resistance forming, lots of volume by price data that was telling us that an inflection from up above was going to give us a good opportunity for a short sale from 54 spot 81. And that one, in fact, you can see there, didn't get us out until the following bar, got us out at 353.63. Each one of those balloons, again, is the execution price. Then as it bumped down on the volume by price, I'm not going to get my pointer to work here, but over on the right side of the chart, you can see where the volume by price inflection was, that big spike out there told us there was significant support down there. So now we had a long trade from 253.63 up to 94. And then we had another long trade, right? As we had another volume by price plateau form. You can see there that vacuum, that empty volume by price range over there. That tells us there's going to be some really easy travel range. That's a program down below, program up above. And, in this case, over the course of the morning, we had lots and lots of opportunities to just go and trade based on what was right in front of us. So this is a very busy day for us. You can see here that this was 9 trades, right? Very unusual that I would have 9 trades in Apple over the course of the morning, plus have the other trades on our trading plan go off. But the other really cool thing about this morning was, right, all the trades that we did together in the room were profitable moves. So this was a very good day in terms of you could read the tape, you could anticipate where the inflections were going to be, and over the course of the morning, we also had Alibaba, and Julie focuses on BABA. That was over $2 per share traded on that one, right through the bands from the prior session's trading plan. And that's basically it. And I would love to say I've got some kind of an indicator to sell you or a black box to sell you or something. Actually, I wouldn't love that. I don't really buy into that whole thing. But this is how we do it. This is how we trade. So we are order flow traders, always have been, probably always will be. And this is just one of the techniques that we use to harness the volatility in the market. I'm going to say again, it's all about psychology, right? So as you look around that table, that's our income trading boot camp that we do. We do it down in Miami Beach, just to be fair to everybody, because a boot camp in California is more like a snooze camp at 6 in the morning, 5:30 in the morning. All those people, those are all very different psychologies represented there. I've got everything there from a cattle rancher to a Beverly Hills attorney to an architect from Toronto to guys who have had various professions, have professions in real estate, have professions in. The key to everybody at that table getting to where they can earn a living in the markets is they have to understand themselves. They have to understand their psychology. So when you look at a strategy like this, you have to put it up against the backdrop of, am I disciplined enough to sit there and put my orders in ahead of time and wait for price to come to me? Because I can tell you right now, if you chase, you're going to get killed. You're always going to wind up getting in at the wrong price. You're going to get out early. You're going to try to lock in a profit, no matter how small that profit is. You're going to wind up letting losers run because it's uncomfortable to take a loss, right? It's very reinforcing to take a profit, punishing to take a loss in a lot of cases. And, that translates into people go upside down, and they do it for reasons that they don't even understand. I tell all my guys, no P&L on the screen. So is that something that you can do? Take these trades and work through and have the courage of your convictions and not look constantly to see, am I up $1,000? Am I down 500? Am I up, down, sideways, whatever it is, because it clouds your judgment. At least it clouds my judgment, and my experience has been it does a pretty good number on just about everybody else. The common denominator with the guys who wound up going to the boot camp and who wind up working with us is what we're looking for is not their proficiency necessarily as a trader. What we're looking for is their sort of understanding of themselves, how they work, how they want to work. And I think that, with anything that you see presented today or anywhere else, that's really the backdrop you have to put it against. Is this something that makes sense to me? Is this something that makes sense for who I am? And then you can go in and, you've got a way better chance of success if you're not sitting on pins and needles every morning when the market opens because you don't like what you're doing, right? So always put yourself in the position of trading in your comfort zone, and you're going to be far better off for the exercise. So with that said, and then we'll take questions. I've
unmuted
here a 30-day sort of open house for you. If you want to do it, then what this does for you is it lets you look over our shoulder as It'll be Julie, my wife Julie and I are trading together in the first hour trading pit. There's other guys who are mic'd up. Goran will be there. Bibbs will be there. So people from different backgrounds who are mic'd up, who are also trading their accounts live. The rules are, you don't call a trade after you took it. You call the trade beforehand. We're all trading from the same trading plans, and you can just sort of see how we go about navigating the open in these big caps, these super caps, how we trade gaps. I'll give you access to our gap scanner at Trader Insight, and I'll give you all the trading plans as well so that you can look over our shoulders, see if this is something that resonates with you. If you need help figuring out how to use some of the stuff or use the site, there's a number down below there, 310-584-6590. You can just call that number, and Victor will walk you right through everything. And in the interim, if you just want to give it a shot, text TRIAL, TRIAL, to 310-299-9148, and we will see you at an open house, Trader Insights, starting Monday morning. As a matter of fact, we'll just start you tomorrow and give you a month of access. So does anybody have questions about this or really anything trading? I'm happy to answer.
Right, let's see. I think I have a couple of questions for you. I'm trying to get to them. Let's see. Do you worry about wash sales if you're trading AAPL every day?
No. So if you're trading in a PDT account, right, you're in and out of that trade during the same session. So all of the clearing and everything is done. The long, short clearing, all that stuff is taken care of in the account by the software, and there is no wash sale. So all the money also that we trade comes right back to us, right? So there is no T3. When we trade Apple, the margin is impounded. It's margined at 4-to-1, right? Because it's intraday, it's pattern day trading margin. You get more margin intraday than you do overnight, obviously. And when that PDT margin impound happens, then once we're out of the trade, it's immediately released and it's immediately available then for the next trade. And you can trade Apple as many times as you want over the course of the day. So the rules have changed over the course of 25 years or so, but they haven't changed very much, and they've only changed, I think, for the better.
Yeah. And I've got also, do you trade ES, NQ, etc.?
So I don't. I definitely have traders who we've worked with who are trading the ES. The long answer is that it limits opportunities sometimes. So sometimes the guys who are trading the ES will say that it only gives them, 1 or 2 signals over the course of a session, and they feel like they're sitting there on their hands a lot, waiting for the opportunities to come to them. Typically, what they'll do then is, they'll trade. For those of you who aren't futures traders, right? ES is the S&P Mini, so they'll trade the S&P, they'll trade the NAS, they'll trade the Russell. I've got some guys who trade oil, gold, and silver with this same style of thing. I don't personally ever trade oil stocks or banks, so that's sort of not in my wheelhouse, and I don't trade futures in general. But the answer to your question is and we've also got people who trade spiders, diamonds, Qs with the same kind of a strategy. It's just going to take a little bit more doing to get the opportunities to come to you, and in some cases, the high leverage that's available in the ES can be very beneficial, and it can also work to people's detriment, as they'll wind up layering on more contracts probably than they should. Let's just leave it at that.
I think we have time for one more, and that is, are you only going long or shorting stocks, and do you use options?
I go long and short. We do have people who will trade options against some of this stuff. It's in my experience, I've always felt that the spreads on the options were not really super workable in the time frame that I'm doing. It's pretty fast trading. we go long, we go short. It's all about where the order flow is. A good portion of what we teach people is how to read order flow, and the traders who work with us, they all manage to build a discipline of long or short. It doesn't really matter, right? It's not about your bias about where the market is going in the long term. It's about where is the order flow telling you the market's going to go in the next 5 or 10 minutes.
Perfect. Thank you so much for that. We really appreciate your time. We're going to just remind everybody that, remind us how to get in touch with you.
Okay, so you can email me if you'd like, Adrian, Adrian, at traderinsight.com. You can also call that number, 310-584-6590. If you have questions, you'll get Victor. He'll put you in touch with me if there's something I can answer, or if you just need site navigation, that kind of stuff, he'll tell you. And then again, if you text trial to 310-299-9148, then you'll have a month to spend with us, and you'll either love it or you'll be sick of us, one or the other.
Awesome. Okay, thank you so much, Adrian. We appreciate your time. I want to remind everybody that if you have to leave early to listen to this webinar, you just go to tradersexclusive.com, then you go to Trader Education, then go to Educational Webinars, and a replay will be posted there. I'm going to introduce to you now our, in just a second, our next speaker is Jason Allen, and let's see, I can take that. And I need to make you the next presenter. Thanks for bearing with me, everybody. I am getting the hang of this. It's one thing to watch people do it, but it's another to do it yourself. Self-muted. Unmute yourself, Jason. Yes. Okay, there we go. And
okay, I think I'm here. Can you
all
hear
right,
me?
Jason, let me just tell everybody who's up next. Jason Allen Jankowski is a private trader with How Losing Traders Think, and he basically goes by Jason Allen. He's self-taught, self-educated, started as a customer in '86, became a trade coach, and he's written 4 books focusing on trading and trader psychology. So take it away, Jason.
Well, thank you for that intro. Very nice. If you could give me just 1 second here, Sherry, I have to show my screen, and I'm not sure which. I think it's screen. There it is. Okay. And we should be good. Let me know if you can see my screen.
We can see your screen.
Okay, it should have my PowerPoint up. It says How a Losing Trader Thinks, correct?
It is there.
Okay, good. Well, first of all, thank you for having me. It's a pleasure to be able to do a broadcast with you guys at Traders Exclusive. I don't think I've done one with you before, so it's going to be exciting for me to find out what sort of audience you have and what sort of questions we have, what sort of experience we have together, because I'm all about forming good relationships and making sure that whatever it is we choose to do together, it always benefits somebody somewhere. So I'm hoping that our listeners are going to get a chance to hear something that really resonates with them. So thank you for having me. I'm going to go ahead and just get started, but I have 1 or 2 little house cleaning things I need to do while we get started. First of all, we're going to advance my screen here. There we go. First of all, I have a disclaimer. Obviously, I have no idea who's listening, so I always want to make sure that the customers know, the listeners know, that trading in foreign exchange, which is the marketplace I choose to focus on personally, involves a degree of risk. You're always subject to the possibility of potential of loss, so it's not suitable for all investors at all points in time. Everything we talk about in here is considered opinion, even though I'm heavily focused on it and believe it to be absolutely the truth to help you improve your trading. It's still considered opinion, so take that under advisement. Also, you need to make sure the trading is suitable for you in light of your financial resources, tolerance for risk, etc. And everything we talk about in here today could change at any point in time, so past performance is not indicative of future results. So I'm going to go ahead and get started now. The regulators are happy. Tell you a little bit about myself, because I don't know who's listening that may have never heard point of view before. I hope that there are some people in here that this will really resonate with, and I want you to consider me a friend in the business. I'm here to help you if I can. And I want to tell you a little bit about myself, just so you know where I'm kind of coming from. First of all, I've been trading for most of my adult life. I did my very first trade in Chicago Board of Trade, big board corn in 1986 as a customer. I started out just like everybody here does, as a customer. Self-taught and self-educated. If there was a PhD in markets and trading, I believe I would have it. I've studied more books, tapes, audio series, webinars, weekend retreats, more than I think anybody I've ever talked to might have invested in. What you can get for free over the internet today dwarfs what I had to spend tens of thousands of dollars on to get educated. So I can tell you with absolute certainty that you're going to be overwhelmed in learning how to trade, and you have got to find a way to really boil that down to the essential, and I think I've learned how to do that. And I focus on trader and market psychology. It's really important for the listener to understand that it really doesn't matter what your analysis bent is. It doesn't matter if you're fundamental or technical at the very, very basic level. It really doesn't matter how you choose to find opportunity or how you define opportunity. It really doesn't matter what that is, as long as you're A, doing it the same way all the time, which is discipline, and B, you understand the psychology behind it. And of course, you need to understand your own psychology. And most traders, this is where they fail. They're usually very well educated, very well defined when it comes to how they find their opportunities, but then they can't focus on the discipline part very well, or they get ideas in their head. Price action causes them to change their thinking. There's all kinds of hundreds of ways where we can lose our focus and our potential, miss opportunity because of how our psychology is working against us. And part of what I want to talk about today in my presentation on how a loser thinks are the basics that we all have to be cognizant of, aware of, and then we'll work on overcoming those. I've learned how to do that for myself, and I also teach others how to do that as well. But it's next to impossible to distill a lifetime of experience into, a 30 or 45-minute presentation on a topic. So what I'm really hoping is I'm expecting you to just open your mind, not make any decisions today about what you hear, other than open your mind and see if this resonates with you. If you go, wait a minute, this makes a little bit of sense, then what I want you to do is try to start a relationship and maybe look into some of the products and services that I offer. And I would love to have that opportunity to work with you. I've written trading software. I train other traders. I provide regular commentary. I have 4 titles published. My latest one, The Psychology of Trading, published this March. It's available as an Amazon Kindle book. And quite frankly, I really think that it's the best I've done so far. But that'd be for you to decide if you've had a chance to read it. I'll provide my contact details at the end of the broadcast, but for right now, I want to just give you an idea that I think I'm pretty well vetted with what we want to talk about next. And when the floor is open for Q&A, I'd love to hear some of those questions. So to start with, every trader has to learn to trade, right? And the process is not unique. It doesn't matter what you want to do. If you want to succeed at something, you have to learn and understand what needs to be done for success in that particular field. Before I got into the markets in 86, I wanted to become a professional racing driver, and I went to Europe and took classes at the Winfield School, learning how to drive an open-wheel single-seater, Formula Renault. I spent 3 years racing Formula 2000 and Formula Ford 1600 in Canada, and I was talented. And there were things I had to learn. And I learned things about physics and how traction happens, how power is applied to the road surface through wheels and tires, things that I never in a million years would have ever thought was an important part of learning how to be a successful open-wheel racing car driver. Very, very different from what I thought it would be. Now, why am I saying that? Because trading is probably the single most significantly difficult thing anyone will ever learn to do. And the reasons why, it doesn't matter what, we could spend a lifetime discussing the reasons. But the bottom line is, if you're not prepared to experience what needs to be experienced to win at trading, you can't win. Same as if you're not prepared to understand how the shoes grip the field, it's a little hard to run downfield to catch a football. You know, if you're going to argue about how to tie your shoes, it's going to be harder to play tennis. You know, there's certain things you have to learn in order to win, and trading is no different. The good news is that trading is a transferable skill. If somebody else has learned how to do it, you can learn how to do it too. But what's the essential difference between people who lose at trading and people who win at trading? And which I believe is what's most important, is what causes people to lose. How can someone come to the table who's educated, maybe has a degree, advanced degree in something, and has been very successful at something in their life, and has learned how to develop income, and maybe been very successful at managing finances for themselves and their family? They'll open a trading account and just get their head kicked in 6 weeks. Can't figure out why. Why is that? What causes someone to lose? Because if you don't know what that knowledge is, then you can't know what to avoid in the process of gaining something that you feel will assist you to win. Now, all losers, and this is everybody, anybody, and I don't mean losers as people that are never going to amount to anything. What I mean is someone who's tried to succeed at something and failed. Somebody who has failed at something that they believe they could succeed at. They share common traits, they share common behaviors. And these similarities are common to every person as well. In other words, if you and I try to succeed at something, my experience is going to be the same basically as yours. We're going to have the same general process. There's nothing new at the core. You know what I'm saying? No matter what it is that you and I try to succeed at, we're all going to share the same basic experience and the same basic issues to get there. You want to learn how to scuba dive? Then you and me and everybody who learns to scuba dive is going to share the same issues. Everybody's going to be exactly the same at the bottom line core issue. Trading, same thing. Everybody experiences the same things. But what separates the winners from the losers? Well, this is my opinion, of course. I think you find it might resonate with you. Failure at anything is the same for anyone. Losers fail in the markets for the same reasons anyone fails at anything else. At the bedrock core issue, losers in the markets are either ignorant of what is causing their failure or unwilling to make the needed changes required to win at trading. And what I find is most common is a combination of both to some degree. In other words, traders either simply don't know what it is that they're missing. They don't know what they don't know. Big problem when it is something like your money on the line. You either don't know what you don't know, you're just simply ignorant of it, or when confronted with what has to change, you don't want to do that. That's just too much work. I don't think that's me. I'm in denial about it some way. You know, somebody says, look, your problem is that you don't have any idea what your risk control is. Oh, I know what I'm doing. Okay. See, losing in a lot of ways, losing in the markets is a choice. It's really a choice, in my opinion. I've dealt with thousands of traders, and I've been through every single issue. There's nothing you're going to experience as a trader that I haven't been through 100 different ways from Sunday personally, and I can tell you with absolute certainty, losing is a choice. If you want to lose, Ed Sequoia said it best, everybody gets what they really want from the markets. What do you mean by that? Well, if you want to lose, the markets will give you the perfect opportunity to do that. You know, if you are looking for a reason why the problem is not you, The markets will be more than happy to use your cash as an educational process for everybody else too. So, what are the similarities between losing traders? What is it that they tend to have in common? Well, the common traits of losers are typically expressed in the markets as certain choices and behaviors. There's certain things that losing traders will do regularly. Market losers operate with similar methods of thinking as other kinds of failure. In other words, if you dissect the losing trader's thinking, it's the same thinking that happens for losing in other parts of their lives or other people's lives as well. They express that thinking, that loser thinking is expressed as where and when they buy or sell in the market. Now, I'm going to make a bold statement. Some of you will not agree with this, but I want you to really think this through. Traders have 100% control over the net result to their accounts. You have 100% control over what happens to your money. You're the guy that clicks the mouse and says, I'm going to buy here and I'm going to liquidate here. I'm going to sell here. I'm going to liquidate here. You make those choices. Now, it doesn't matter if you're not in control of that choice, which is part of losing behavior. It doesn't matter why you decided to buy or sell or what your reasons were, whether they were emotional or conditional or prearranged choice to get in or out at certain times and prices. That is immaterial. The bottom line is nobody twisted your arm to buy or sell and liquidate with a gain or a loss. So you have 100% control over your equity, whether you believe that or not right now. But losing traders don't believe that. Losing traders feel they have little or no control. The marketplace appears to be this monstrous, undefinable, massively misunderstood something that could take my money away at any minute. So I got to have some control. And that feeling of low control, that's the result of their loser thinking, their belief that gaining better control will result in reducing the risk. Most traders believe that they can reduce the risk in trading. That focus dominates what they do, but the fact is you cannot reduce the risk. The previous presenter, Adrian, brought up a part of trading that is something most people really don't have a clear understanding on. He talked about order flow. Order flow is the only reason prices move. If there's 100 buy orders and 50 sell orders, the market's going to rise in price. The reason it's going to rise in price is because there's more buy orders than sell orders. So the market fills the sell orders and keeps looking for more sell orders above the market. So more buy orders equal a rise in price. More sell orders equals a drop in price. So it doesn't matter what the news and information and technical analysis, none of that matters. In the final bottom line, how do you make money in the market? You got to be on the right side of the order flow. If you're on the wrong side of the order flow, you lose. I've been trading for almost 35 years, more than half my lifetime. Made and lost 7 figures so many times it's scary. I can tell you with absolute certainty, when I wake up tomorrow morning and sit in front of my screens, I could make a choice that doesn't result in a profit. I could be on the wrong side of the order flow. It doesn't matter how much you know, learn, or understand. You could be on the wrong side of the order flow. And why is that? Because nobody knows what the order flow is. They never will know. They can get really good ideas as to what it might be, and you can get lots of really good technical help to figure out about what it's probably likely gonna be. But the bottom line is, you really don't know. Nobody knows. And because nobody knows and nobody will ever really know, really what you're doing is a very, 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 very educated guess in most cases. And you could be wrong. So since you can't reduce that risk, it doesn't matter what your approach to trading is. It doesn't matter what your technical approach is, your fundamental approach, your emotional approach. All of that boils down to being on the right side of the order flow. Everything you're trying to do is to put yourself on the right side of the order flow when you decide to click the mouse and say, I'm in. Well, if you didn't time it right or you weren't correct to begin with, you lose. You're never going to reduce that risk. But losing traders believe that they can reduce that risk and they can gain more control. So what are some of the common thinking traits that become failure? In other words, if I'm a losing trader, what are some of the things that I think about? What's in my head on a regular basis? Well, in general, they boil down to roughly these 6. I mean, there's a whole bunch more. I mean, I've got stacks of documentation that I could share with any interested listener about kinds of emotional things or thinking processes that will lead to failure. But they kind of boil down to this. Losing traders tend to have evaluations in their head, assumptions, misconceptions, illusions, justifications, expectations, exceptions, excuses. In other words, laying blame. All of these loser thinking patterns result in a buy-sell choices that attempt to, quote, reduce the risk, but they can't do that. And that's the market term for gaining better control. In other words, I got to have more control. I got to reduce the risk. So these thinking processes tend to support the risk reducing mindset that leads to buying and selling in the wrong spot. I'll give you a perfect example. Any of you guys out there do something called waiting for confirmation? Waiting for confirmation is basically a very well thought out illusion that if a market is going your way, it'll continue to go your way. And when it's proven to you that it's going to go your way, that's the time to get in. A professional trader will buy a sell-off. When the market sells off and reaches a predetermined price point that he feels is the time to be a buyer, he buys sell-offs. He will get in, no questions asked, run his stop, and that's it. Either the trade works or it doesn't. The loser, on the other hand, waits for confirmation. Why is he waiting for confirmation? Because in his mind, I can't take a risk that's not defined. I got to find a way to reduce the risk. So I'm going to wait for the market to move higher before I buy it. So when's the best time to buy? One of the best time to buy a sell-off is when the market makes some sort of a low print. You make that low print, you buy. But the loser won't do that. He will wait for confirmation because now the market is doing 2 things. It's in his mind, it's becoming more and more certain that this is going to work because he needs a sense of certainty. And it's giving up profit potential. When's the best time to buy? Low. Why would you buy the market after it's given up 2/3 of the profit potential that you're looking for? You know, I'd like to buy this new Cadillac you have on sale for $10,000, but I'm going to wait until the price gets to 16 because I think it's going to go to 20, and I'll be a good buyer at 16. So I'll lose profit opportunity because I need to feel good about the trade, that it's got a certainty to it, and that it's proven it's already going my way. Well, that's what? That's an evaluation. That's a misconception. That's a justification. If we look at these in little pieces, evaluations, what kind of loser thinking comes to the table here? This is market study. I got to evaluate the market price because this can't be something as simple as buy low and sell high. Why do we have all these books and tapes and audio series and people discussing it? And why is it that there's all this stuff and different ways of analyzing the markets? There must be some truth to this, right? In the case of every losing trader, the process of evaluation begins with technical analysis, some sort of, I got to study the market because I can't figure it out without help. So losing traders tend to believe that technical analysis can help them reduce the risk by analyzing previous price data. And then that's in turn used in an attempt to predict price potential moving forward. But the market moves in price because of the order flow. It doesn't move based on studying the relationship between low prints and high prints and retracements and pullbacks and trends that you think are happening. The market moves because of order flow. It doesn't move because of analysis. But if you evaluate the market, then that helps to reduce the risk. and that the assumption is also happening here too. Evaluation, is also an assumption behind it. And that assumption is market study will result in reducing the risk. I personally don't do any market study. I have absolutely zero technical analysis that I do. And I do my share of losing trades and my share of winning trades. But the reason I have a net gain is because I've learned the issue of money management, which is usually never taught in any of these courses or programs or webinars, because money management's boring. But what's interesting and fun and sexy is, pivot point analysis and all the rest of that. But you can't reduce the risk by you doing analysis, because the market doesn't move based on analysis. It moves on order flow. So one of the first things a losing trader will do is will put his confidence into something by evaluating prices. Losing traders tend to make assumptions about the meaning behind certain market-related events and how that can help reduce the risk. For example, news. A lot of losing traders believe that what happens on the news is gospel. Maybe the price reaching a new level, that means something. Maybe there's a new piece of software out or some sort of technical analysis that's new, and it's been back tested. And if you ever want to take some time on back testing, I can share with you a few things that will scare you, and you will never buy another trading system again, as far as back testing is concerned. Assumptions are made by losers because they believe that certain things are facts. The facts, of course, we all know, facts are immutable. If the fact is the fact, then that's the fact. We can't argue that. So a fact is true. So therefore, that's going to help me gain more control, resulting in reducing the risk, right? That's an assumption. Market moves on order flow, not because there was 10,000 more people mining gold this year than last year. Misconceptions or illusions. This is a big one. If these are present in a trader's thinking, they affect the conclusion-making process. And that conclusion-making process has to do with the meaning of certain prices or price action. And this is manifested in a trader's thinking by using certain words during the process of evaluating. In other words, the market is a chart of a market's in front of the losing trader, and he's trying to reduce the risk by analyzing the price, and he's comparing every price to every other price. And then he says something like this: well, the market should do this, or it could do. It can't do that. It must do this. Should, and must, can't are global constructs of finality that have to do with the facts being accurate. So if a market moves to a certain price level, that's what should happen. And therefore, the analysis done to create that knowledge is validated. And that means the misconception or the illusion is more firmly believed. In other words, if I told you that holding a 1964 penny in my left hand while I danced in a circle in the moonlight helped me predict the price of gold, you would think I'm insane. But if I then did that on the full moon, every full moon, and the result of the moonlight penny dancing was to buy the market, and I bought gold and the market rallied, well, the money made validates the moonlight penny dancing scenario. You see what I'm saying? People will believe anything if money's involved. If it turns out that I can do some sort of analysis and the market should do this much or that much, or it couldn't do that, and that's validated by me making money, well, then I believe that even more so. And this is why confusion can be such a big problem for traders, because the next time they do the analysis the exact same way they've done it before, this time it doesn't work. They can't figure out why. Because the last time I did it exactly this way, it resulted in a profit. This time it didn't. Well, the reason it resulted in a profit is because you were on the right side of the order flow. But that happened by accident. You think it had something to do with your analysis, but in fact, you were on the right side by accident and you didn't know that. So since you can't duplicate that behavior, you now have a conclusion-making process that is an error, and that's the illusion. Justification. Losing traders have to justify their losses. They have to explain it to themselves. And this is because they believe the prices can be predicted. So if they couldn't predict it, there's got to be a reason why. What went wrong? So if the market went the wrong way, that loss could, quote unquote, could have been prevented somehow. My analysis could have been different. My analysis could have been better. What am I missing? Therefore, I got to go back and hit the books harder. And the critical factor in this thinking is that the focus of the justification is outside the trader. Nobody ever looks inside and goes, wait a minute, I'm an idiot for thinking the way I'm thinking. I'm losing money because my thinking is screwed up. It's not congruent with how the market creates profit opportunity. Because my thinking is not congruent with how the market generates a profit for anyone willing to participate. If I can see the order flow developing, it's going to pay me. But if I'm thinking anything other than order flow, what happens? I have a potential for a loss. It's greater potential for a loss. So is it more important for me to hold on to this outdated illusionary thinking, or is it more important to change my thinking? Well, the problem is inside of me. The problem isn't outside. It's not in the charts. It's not in the analysis. It's not in the critical understanding of the fundamentals, right? See, the trader analyzed the charts wrong. I analyzed the charts wrong. So-and-so said something, the news was a surprise. It doesn't matter what it is. Since the trader is trying to reduce the risk, which means gain more control over their results, since he's trying to reduce the risk and the loss happened because of something there was no control over, then that explains it. The blame is not on the trader. Can't possibly be my fault. I can't believe the president of the ECB said that. I was on the right side of the euro until that happened. Son of a gun. Well, there was no way to anticipate that. Guess I'll just chalk that one up to whatever it is. Expectations. And this thinking can be especially difficult and dangerous for you as a trader if you have expectation bias. Once an expectation is held in the mind, very little other data will be considered or absorbed. So expectations can result in the trader putting confidence in something that you're not completely understanding. For example, the purchase of a new trading system that predicts a significant gain over time. Well, why is it that good? Well, what is it? Is it a trend following system? A trend following system will only work about 1/3 of the time. The other 2/3 of the time, the market is consolidating or reversing. So for a 35 or 40% winning trade ratio, that's about right for a trend following system. How come this guy says it's a trend following system with 80% winning trades? What is he defining as trend? Is he really using a trend, or is he scalping? You know what I'm saying? It doesn't matter what it is. What it is the fact that the client, the trader doesn't really understand what it is because he has an expectation bias. It was back tested and a whole bunch of people are using it, so that must work for me too. And expectations create bias, and if a trader is expecting a price rise, so for example, in the bias, maybe you'll do your analysis looking for clues that support a bullish point of view and tend to ignore data that suggests the price fall is more likely. So you have to be very careful with the expectations. Exceptions or excuses, which is basically blame. Whatever happened, that's not my fault. That's basically how most losing traders tend to. They get angry, they blame something else. So-and-so said such and such. The news wasn't supposed to be what it was. There's no personal responsibility. It couldn't have been avoided because of X, whatever that is. And so this is the end result of illusions operating in the trader's thinking. Because the trader was attempting to reduce the risk using all the tools that they've come to rely on, and according to what the charts say, but something happened that wasn't supposed to happen. So there's simply no way to avoid that loss. The trader doesn't have to accept the blame himself. See, one of the things that I do is I don't care what the market does. If I'm on the wrong side of the order flow, that's my fault. So if I put a trade, if I get a signal to do a trade and I put it on and 30 seconds before the news comes out, and the news, creates an order flow against me, and I'm spanked pretty hard on that, That's my fault. That's not the news. That's not somebody front running. That's not high frequency getting in ahead of my order flow. You know what I'm saying? That's my fault. I chose to rely on my systemized approach, which had a better than chance probability, and this particular probability didn't work. So I didn't see the order flow properly. That's my fault. That's not the market's fault. So in summary, I've tried to introduce you to some of the basics and the various methods of thinking. They're interrelated, and they often involve more than one kind of thinking operating at the same time. And that's why trading can appear to be so confusing for so many traders. A lot of these issues are present in your thinking as one big thing happening all the time. And the end result is virtually no potential for a trader to make consistent gains, because your thinking will most likely lead to placing trades for reasons that have little or nothing to do with actual price potential. If the market is run out of selling orders and there's nobody in that market other than the shorts, the only way they can get out is to buy the market back and cover their short position. They have to enter a buy order. So if nobody wants to sell the market and all the sellers want to get out, and the bulls step up with fresh, brand new, never been used before buy orders, there's going to be a buy order overload. Great time to be long that market. You'd want to buy that sell-off, right? But if you can't figure that out and you decide to sell the market because it broke through consistent support, and that's from the charts, and the momentum indicator said this, and I've been following Dennis Gartman, and he says that, and the news came out and it was bearish, and blah, 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 this breakdown, this is time for me to short this market. And so you sell it, and 30 seconds later, you're losing, and by the end of the week, you've gotten spanked really hard. Why was that? How come it was wrong? What was wrong? Well, it's not my fault because, somebody had bad information somewhere. And if Mr. Garden hadn't said such and such at her meeting in Brussels, then that market never would have gone that way. Oh, well, guess I'll try again next week. Things like waiting for confirmation, advanced analysis, waiting for the news. These are all attempts to reduce the risk based on assumptions, illusions, misconceptions, all the things that we talked about. All these critical loser thinking processes are the same for anyone facing a failure in any area of his or her life. It's the same thing. Trading is life. Everything else is incidental. Trading will expose you to everything that you are or ever will be if you have the courage and the commitment to go that route. I am a completely different person than I was 25 years ago because I traded. It takes something in you to overcome the loser process that most people don't want to do. That's why they have things like they're always in a car wreck and they're always getting divorced. I knew a guy back in Chicago, married. By the time I said, I can't hang out with this guy, he's a moron. By the time I got to that point, he was 41 or 42. And I knew him from, my early days when he was in his late 20s, maybe. Married and divorced 4 times in a 15 year period of time. Married and divorced 4 times. I looked at him one day and I said, dude, do you ever stop to think, you've married and divorced 4 times in 15 years. Do you ever think maybe the problem is you? You ever think maybe you're the problem? And he said, I knew it. I knew you would take the side of that, that BITCH. Oh, really? Okay, I get it. You're losing for the same reasons you can't keep a marriage together, or you can't get off drugs, or you can't stop drinking. It's all the same thing. You're in denial about the real issue, and you won't make the changes you need to make, right? That's the same for everyone. To excel at anything, we have to change and adapt our thinking to the requirements of that success. Otherwise, it don't happen for us. And this is why trading can be so difficult for most losing traders. They either don't know they must change their thinking to succeed or refuse to believe they need to. They continue to lose while all the time getting even more market knowledge, but the fact is the real problem is within them. And that's where the work is. Okay, brief introduction to how losing traders think. I hope nobody was looking in the mirror too much. Hope nobody hates me. That's why I don't put my address on these things. Please consider me your friend in the business, though. I'm here to help if I can. I've got a lot of free content that's available on my website, and you can get a hold of me starting tomorrow morning if you want, maybe this afternoon, by using the Contact Me form. All you got to do is fill it out and say, I want to talk. Right now, I got a free copy of my online ebook, The Top 10 Mistakes Forex Traders Make. Now, it's written from the standpoint of if you're a Forex trader, but the insights are timeless and would be applied to any trader attempting to improve his rate of return. All you got to do is go to my website, theliononline.com, scroll down to, I think it's page 3, free content, free PDFs, and it's right there. Also, I want you to click on free sample of my latest book, The Psychology of Trading. Got the first couple of pages. I think it's the first 70 or 80 pages. I forget. The Psychology of Trading, my latest book. And I hope you will continue reading it and buy a copy. That's really what I would love to have happen from our time together. Because if you read that through in its entirety, all 360 pages or whatever, I think you're going to find that I'm onto something that can really make a difference for you at a very basic and applicable level. It's not ivory tower stuff, guys. I've had my ass kicked in this business so many times and have come out on top. I can tell you with absolute surety, complete conviction, trading is a learnable skill. Anyone can learn to do it. If your results aren't what you want yet, that is a solvable problem. And I can tell you, I know exactly how to solve any problem because I had them all. I had every one of them. And if what you're dealing with you think is a big rock right in front of your head and you'll never get over it, wrong. It's the same problem everybody has. It's the same solution everybody needs. All you have to do is open the door and you'll find it. Maybe I can help you with that. If not, that's okay. I'll point you in the right direction to someone who can.
Awesome.
Floor is open for Q&A if you guys want to take a minute. I don't know if I'm over my time yet, Sherry.
Not over
We
your
have a
time.
minute?
You're doing great. You're doing great. Thank you so much. That was awesome. I have a question for you. Somebody would like you to explain taking responsibility with the trading and accepting the risk.
Okay. I would love to ask them to be more specific what they mean by accepting the responsibility and accepting the risk, because the way I understand the question, the bottom line is you have to be the kind of person that can say, I am okay if my account balance drops. I am okay if this trade doesn't work. If you're not at the point where you can do that yet, then what you're doing is holding on to a need for certainty. You can't participate until you're absolutely sure. That needs to go away. You need to think in terms of probabilities, not in terms of certainties. Losing traders tend to think in terms of certainties, trying to establish a degree of certainty. Winning traders know by testing out their edge, the edge that they find for themselves, they test that edge to the point where they know exactly what the probabilities are. Like I can tell you from complete confidence, one of my reversal signals has a 65% accuracy. That means when that shows up, I have a 65% chance of a lead on that market. Now, what I do with that lead determines my net at the end of the year. But if I take that signal, I'm going to get a lead. So what are my rules for managing my probabilities? That's how you learn to accept risk and accept responsibility for the trade. But until you know what your probabilities are, you can't have the confidence to do that. So you're probably your biggest issue to work on right now is going to be establishing what is my edge, what is my probability, so I can test it completely. A lot of people don't have an edge that they can say is exactly this, like put it in terms like, if the market opens higher after reaching a 1 week low, I buy. That's an edge. Now, how accurate is that? Well, you know, if you tested it over every market that you're willing to trade over a 1 year period of time, maybe it's 42% accurate. But it moves, you know, off that low, and it makes a 2 week high usually within a week and a half. Okay, so if you buy a weekly low and it makes a 2 week high, that's probably more than a risk on that trade to find out. So you risk 100 points to make 300. And you did that 42 times out of 100 trades, you could see where the math would make you a moneymaker. You see what I'm saying? So your probability, say, accepting the responsibility and accepting the risk, it probably means you're not quite there yet with the issue of the difference between certainty and probability. You're still probably looking for a sense of certainty before you participate. You got to be okay with the fact that the probabilities are what they are. If you get your butt kicked today and you follow the probabilities at 100%, you are a winner today. That's how you have to redefine it. You followed 100% of the rules that you wrote for yourself at 100%. Today they were wrong. They didn't work. Tomorrow they do work, and the day before they did work. So net, at the end of the week, you're up 6% for the week. We're okay with that. We take the risk because the probabilities are in our favor. And we have proven that out through our testing process, which is done in real time with your edge in real money. So you're probably somewhere in between that issue of gaining confidence that my probabilities are accurate and I need a sense of certainty because I'm afraid of the risk. You're somewhere in there still.
Yeah. All right. With that, I'm going to need to go on to our next speaker. I do have other questions for you. I'm going to figure out, folks who wrote questions, I'm going to figure out a way to get you some answers. And thank you so much, Jason.
Sherry, before I sign off, then just give me 30 more seconds here. If they go to my website, theliononline.com, there's a contact me form. All you have to do is say, hi, my name is, I have a question. I promise you, if not tonight, then certainly tomorrow, I will return all my calls, all my contacts, or you'll at least get something from me that says we can make time to talk. Excellent. And I promise you I'll help you. And in between now and then, thank you again for the opportunity to work with you. And I'm sure we'll speak again in another day or so just to make sure we haven't missed anything. So
yes, sir.
Thank you.
Thank you. Okay. Have a good day. We appreciate you being here with us.
Have a wonderful day yourself. Great. Thank you.
Bye now.
Bye.
And our next speaker is going to be Matt Brown, and I'm going to add him, make him the presenter. And I would like to introduce him to you. He is coming to us today with the new normal, how to thrive on 10K in the futures markets. He's with newbietrader.com. Over the past decade, Matt has taught thousands of students around the globe how to make a living trading the online futures markets. Although you may not have heard of him directly, his alumni are among some of the largest professional Chicago pit traders who transitioned off the floor into electronic trading. Some appear regularly on CNBC, while others run hedge funds, work for institutions, and others are simply homeschooling moms who just drive the kids to soccer practice. Although it is nice to have high-profile clients, the majority of our students, his students, and alumni are people just like you and me who want nothing more than the freedom to work when they want, where they want, how they want, and for whom they want. And with that, I will bring in Matt. Are you with us?
I am here. Can you see my screen and hear me okay?
I can see your screen and we can hear you, and I will mute myself and let you take it away.
Fantastic. Thank you so much for that introduction, Sherry, and I appreciate both yourself and Dan and everyone over there for having me. And I want to go ahead and dive right into this because there's a lot of information I want to convey, and I don't want to waste any of your time. I know you've already been on here for a couple of hours already, but let's talk about the new normal and really how to thrive on less than $10,000. And it's really great that those last two presenters have spent so much time on the mental side of trading. This is the first time I've participated in one of these events and I've seen this spin. I mean, I always pay attention to the mental side of trading. In fact, that's what I'm going to be talking about today, as well as some techniques. But it is the most important part, and I'm glad to see this shift moving this way. It's just fantastic. So before we start, obviously, you've already heard about the risk of trading, and particularly I deal in the securities futures area. And when you trade futures, it is risky. And I'm going to be showing you some live statements just from the last few days, because I'm working with traders every day. And I want to show you that this is true. I am putting my money where my mouth is, but just know that these results are not typical and they're for demonstration purposes only. I say that because I'm going to show you some nice percentages and things like that have come from a few different places. And although they're obtainable and although students can do it, I just want you to know that it's just what's happened in the last couple of days in the market, and they are nothing more than just those results, and trading is risky. So my goal is really to shift your profit paradigms. I'm going to show you financial proof of a few successful trades and some statements. I'm going to teach you about trading psychology, some hacks that you can take to be your own trading coach. I want to introduce you to probability stacking, how to stack the deck in your favor and know what the odds of winning will be. I want to show you the power of trading levels, or those inflection points that Adrian was talking about in the first presentation. I think it's very important to have a plan going into your day and being able to react, and again, to be a proactive trader versus a reactive trader, and know kind of what your if-then statements will be. And then towards the end, I'm going to offer you to join me over a personal coaching and see if there's some lives I can change over the next 12 weeks, like I just finished up with this previous 12 weeks. Just to give you a quick idea before I get into this key to success, when the whole COVID thing started coming out, I knew there was a lot of people that were displaced from their jobs. I knew there was a lot of people staying at home, and I knew I had an opportunity to grab some traders and get their attention. So I put together a 12-week program that included 4 weeks on just started off with trading psychology, productivity, effectiveness, mental health, and all those things that you get from a professional coach. We did 4 weeks of that before we got into the markets at all. And I will tell you, these last 12 weeks, we're on week 12 right now, to 100% of my students that came through, and I was coaching them one-on-one, so I could only take on 10 students. But 100% of them have changed their lives through this process, and I'll show you a few testimonials at the end about that. But I'm wondering why I never taught like this before. I've been in this business for many a years, and this is the first time that I put all the emphasis on the individual before we got into trading, and it's been remarkable, the results that I've seen. And I will never take on clients or teach trading the old way. So this new normal is my new normal as well, and I've kind of cracked the code, and I'm very happy with it. But basically, let's talk about newbie trader and what our key to success is. I think it's kind of a three-pronged approach. I think you have to have a plan, and you have to make sure that you have a consistent way to manage trades once you're in it. That's kind of very key, very important part. And when you actually get in a trade, you have to have rules and an entry trigger. So the overall plan is kind of like the market structure, if you will, and how you come up with your way of trading. Then you have obviously your trigger and then the management. And when you get those things together, it comes up with a very high probability trading system. And these are like 3 systems within a system, but these systems together give you a very powerful edge. And when you have that, that's when you can learn to be patient. That's when you show the discipline you need as a trader, and that is what ultimately gives you the confidence to do it day in and day out. So for those of you that do stay till the end, I do have a special bonus for you, and we'll talk about that in a bit. So who am I? My name is Matt Brown. Like many of you, I did not come from a trading background. I grew up in the Midwest in Ohio, very poor family. I think when I was a senior in high school, I think my mom made $17,000 that year, and I was the last of 4 kids, and my parents were divorced. So to say I was poor is that's to put it lightly. But I ended up getting a scholarship, went to Ohio State University, and from that, I studied in engineering, and I got a great job, and I went into corporate America, and I started moving the corporate ladder, got my MBA, yada, 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 and I was miserable, right? Because I was just doing something that I just kind of followed this path, but I was happy in the fact that I had already changed my social economic status just by the fact that I got my college degree and got out of my hometown, which was a small farm town with very little advancement opportunities. Now I'm just an everyday father and husband. Off to the left, you can see some of my kids and things we do. But over I guess it's about 15 years ago, I got introduced to this trading thing, maybe a little bit more than that, and I became a customer of Invest Tools, which is now owned by TD Ameritrade, and I went through their quote-unquote PhD program. I never even knew the markets existed, and anyway, I took it to heart, studied hard, was able to become one of their success students that they took around the country and put on stage, and they asked me to, come be an educator for them. I did. I denied them on that, and at that point, I just went off on my own and was trading. And then my business that I have now kind of spun out of that. But to tell you that I've spent over about $100,000 on my education after college is no exaggeration. Not only do I spend it in the trading arena, which is part of that, but I spend it on all types of areas of getting better mentally, physically. It's just I'm a perpetual learner. I think learning, if you're not growing, you're dying, and so I just absolutely love it. And to this day, right, I probably have 3 or 4 courses I haven't even cracked on the covers on yet, but I will, because I just love knowledge and I love learning. For about the last 12 years, I've been mentoring traders all around the world. I've coached and taught thousands of people worldwide. I've developed trading systems, tools, algorithms. I've hired programmers, and I've run trading rooms. I have some books out there, and I'm also, the most recent thing I did, I went and got certified on a life success transformation coach, and I've applied that to trading. And that is probably one of the things I'm most proud of, because I've now been able to work with my clients in a more intimate level and really get to the heart of what's causing them some of those negative pattern thinkings that Jason was referring to in the previous webinar. And, that is where I've been spending all my time, and that's where my next book is. And that's why I'm just reinvigorated about teaching traders again, because I realize it's really not about teaching trading. It's about coaching the individuals to success, and trading is just our avenue that we're doing that in. So super excited about where my business is going to be going based off of what I've just done. And let's get into kind of what's happened here. So since this, February top, the whipsaw that's happened with this COVID-19, in 21 trading days, the market, and I'm sure many of you are aware, lost 34.6% of its value. So if you had $10,000 invested in the market, that $10,000 dropped down to $6,500. And right at that point, most people probably pulled their money out of the market, only to see it jump up 41.4% off that bottom in the next 84 days. So this picture was taken last night. So 3140.75 is where the S&P ended last night. So your original $10,000 investment basically has gone nowhere. Anyway, it's gone down slightly in the last 105 days. So the whole purpose of my presentation is to show you how that same $10,000 can provide a living. And I know that's a stretch to say, but let's just go ahead and get the proof out of the way now so I can have your full attention for the remainder of the presentation. This is a small account that we take down to $50,000 and we liquidate it, and we just trade on that $50,000. Now, I don't use all $50,000 for any type of futures trading or whatnot. I have at the bottom of this chart what is listed as the intraday margin. So this would be an example. This is going back to May, but this is 2 days in May trading crude oil and $2,800 intraday margin on crude oil. This is the Tastyworks platform. And in that 2 days, you can see that amounted to 16.4% margin on risk. Return on margin is what ROM stands for. So the next graph I want to show you is just from last week, the last 7 days in the ES. To trade the full-size contract in the ES, you need to have $4,125 intraday margin. That 1 week margin, and I'll tell you, this was basically, I think 3 trading days. I'm showing you 7 as but even with 7 days, it's a 35.7% return on margin based off of that $4,100 needed to trade that amount. So the last 7 days, $1,400 there. And then you can see this is the micro E-mini future. So this is the micro version of the S&P. It trades at 1/10 the size. And in this example, you're only using $412 per contract. Now with micros, you end up using 2 or 3 or even 4 contracts, if you will. And so I show this at $1,400.22 as only an 86% return, because I know that I was in there with 2 or 3 contracts when I was doing this. And the only reason I am doing these size accounts and these size trades is because what I have found is my customer base, they can have a $10,000 account, and they can take that $10,000 account, and if they're generating, you know, a couple $1,000s a week off that account, that's enough for them. So I'm just showing you proof here. There's $1,400. This is the same account, and we're not trading multiples at any given time. So it's, you know, the same 10,000 can be used for various, but there's 1,400. Another 1,400. So, you know, call it 2,800, and then another. So there's, you know, well, we'll just do the 2 weeks worth, $2,800 there. And the return on margin percentages are great. So hopefully, you know, with that, I'm showing you that it is doable. So now let's just focus on the process. What gets us there? So what I want to talk to you about today, or my game plan today, is trading psychology. Now, the last 2 presentations, I've hit that pretty hard. So I'm going to lighten that up a bit to give us a little more time about probability stacking and getting into some charting examples. But with knowledge and with trading, you know, there's 2 frame points I need you to take from today. And one is the value of learning. I told you that I spent $100,000 on my education. I'll continue to spend that kind of money, because to me, knowledge is more valuable than the money, because with knowledge, you can figure out how to bring in more of the money. Money is a measurement, but money is not what gets you up and going. It's that knowledge. And what you learn is more valuable than the outcome that you'll get. And what I mean by that is, you can have a positive outcome and you can have a negative outcome. But if you learn from that negative outcome, it can lead to much more greater positive outcomes. So just being able to learn, that's the valuable key there. Understanding that you can get consistent results, and there's a process that you can model. I don't know how many of you study neuro-linguistic programming, but it's all about the modeling and the repetition. And then the key domain to learn, you know, it's how we transform and how we grow as humans. Another thing is just eliminate failure. So the simple way to eliminate failure is to learn from your mistakes. Learning means to, you know, encode that experience in a way that it turns into something, you know, learn from that mistake and turn it into something that you definitely can use later. And then over-identification with that failure, or that over fear of failure, that freezes you. And we'll talk about, you know, the chemicals that happen in the body that causes that, but you really want to embrace it. Understand that failure is okay. And I think you heard that from the other 2 presenters, that, you know, it is your failure. Own it, accept it, move on with it, but learn from it. That's the real takeaway. So a few of the coaching habits that I like to do, obviously journaling. It's difficult to do, and I'm not perfect at it either. This is an area that I am constantly working on being better at, but you really need to take track of your trades and journal them, and not only journal about the trade itself, but about the event and the emotions and what was going on. When you're actually in your trading, I want you to strive to be super calm, super focused, and I talked about those first 4 weeks of my coaching process. Well, a lot of the stuff we did was not only establish goals and things like that, but we decluttered my students. We had them do things around their house, around their bodies, their habits, because it was all about like clearing their mind and opening them up so they were ready to learn and really to put in what we needed to. So, you know, you need to have that calm, super focused state, and part of the training is learn how to be focused and how to do things in your life and in routines, so you can sit down at your trading desk for an hour or two in the morning and be laser focused, so you can attack the market and take what you need and be on point. And then, you know, save the other hours of the day when you don't have to be as focused, but it's dialing that up when it's needed. Acknowledge your self-talk. Take the negative, reframe it into positive. You know, you don't want to always be beating yourself up. You want to give yourself these positive affirmations, positive things that are happening in your life. Take knowledge of it. Take a negative trading experience and find the bright side of it. Even when it is a losing trade, find the bright value in that, and it's going to really help out the way that your mind expands and your frontal lobe works. It's great. And always work on something when you're trading. Don't work on too many things, but pick something. Like for this week, I'm going to work on my patience, and journal about how it's going through every day. Or I'm going to work on my fear of missing out, or I'm going to work on how I adjust stops once I'm in a trade. So it's those different things that are happening, that happen to all of us. It's overwhelming if you're trying to always be working on all of it. You just got to pick off one little chunk of it and work on it, maybe for a week, journal about it, and then come back to it the first week of the next month and do it again. And always have a rule or a reason to be doing something positive for your trading. And make sure you're focusing on your trading, okay? Make sure you're focusing on your execution in your trading, not the performance, because the performance is random, and not on the P&L, because the P&L is a result off the random performance. All we can do is set ourselves up in the direction of a consistent series of actions and monitor ourselves, and then we'll get the results. They'll come. So focus on your trading. Here's the thing about losses. I always tell my customers, you know, just like any other business, you have to go out and buy inventory. Well, guess what? As traders, you have to buy losses. You're going to have losses. It's the cost of doing business, just like Main Street when they go buy their inventory to run their business. You have to have them. If you don't have them, you're not trying hard enough and you're not pushing yourself. So accept losses as nothing more than part of the inventory you would spend in any business, and prepare your mind for stress. And that is to avoid distress. And so I like to use visualization exercises. Just like you want to visualize how things work out to the positive, you want to spend some time visualizing when things go wrong and prepare your body for that losing trade. So when it happens, you don't get all the chemical imbalances going that throw you onto tilt. We'll talk about that in a minute. But if you can imagine the situation and how you're going to deal with it prior to it happening, you avoid that distress. Stress is good. Stress is optimal performance levels. You need to be at stress to trade well in most situations, because when you're stressed, you're on a super high level of alertness and you're operating on all cylinders. But the wrong kind of stress, or too much stress, or unexpected stress, that takes you to distress, and that's where the chemicals start flying around your body and are do some very, very bad things. So distress can come from those actual or perceived threats. You know, you can get yourself worked up just by thinking about things, and I'm sure you've done that in your own lives, right? You might have made up a whole argument with your spouse or your friend or whatever, based on something, the way they looked at you, or you thought they looked at you or whatever, and it had nothing to do with the situation. It was something that you made up in your mind, and you got all worked up about it. And then when you talked about it, they're like, no, I wasn't ignoring you. I didn't even see you. I was just got a phone call about my great aunt in the hospital, and I was kind of in a daze. I didn't even see you, right? But you've made up a whole story about why they didn't talk to you, and it got you perceived that there was something there. And that is an example of how you can do distress. So distress-induced downshifting, that's where you take one of those perceived threats, whether it's be real or imagined, and it goes into, I call it the triune brain theory. You have these three brains. You have this reptilian brain, which is the oldest, that's their survival. You know, that's just the fight or flight mechanism. And then you have this emotional thinking level of the brain where you have rational thoughts, but that only works when that brain is in control. And then you have the higher level brain, or the logical brain. Well, the problem is when you get one of these threats that hit you, it comes right into your spine. It hits that, reptilian brain. And before it gets up to the brain where you can be logical about what's happening, that reptilian brain's got you in kind of fight, flight, or freeze. And you got all this adrenaline and cortisol flushing through your body, and you go on tilt, and you don't even know you're on tilt until it's kind of late, and all of a sudden you're like freaking out, and you realize you're accounting, and your body's just in all this mess, right? Well, I call that tilt. And when you're in tilt, you got to get out of it. So I give you just this calming exercise. And next time you're in tilt, just do this and get in habit. Just snap your fingers like twice. As soon as it might be 30 seconds, it might be a minute, it might be 10 minutes, but at some point you're going to wake up. When you realize you woke up, snap that fingers, clap your hands a couple times, throw your hands in the air and just say, I got this, just use that as kind of like an anchoring mechanism, just to say, okay, I'm aware that I was on tilt. Just by acknowledging that, you're just going to take your trading to a new level, and then go through some breathing, just 3 or 4 deep breaths from the diaphragm, nice inhales and exhales, and just reframe whatever happened, those negative patterns, into positive, and then go deal with the situation. Don't freeze and let it turn into a week-long loss, okay? And just remember, your thoughts lead to feelings, feelings lead to actions, actions lead to results. You are in control. I can train you on this. There's several people out there can train you this. I'm going to give you a book to read that can help train you on this. But there is a way to get yourself into a better state. And you already heard this already, kind of take responsibility for yourself. I say put your big boy pants on, and I'm not being anyway. If you're a female, put your big girl pants on. But I don't know one female that likes to be called big girl, so I'm just going to stick with big boy pants, okay? Put your big boy pants on, but it's not gender specific. I just want you to take action for what you're doing. Observe yourself, have discipline. Make sure when you're trading with a definable edge. You're the one that's responsible. There is no holy grail. You've heard 3 people now tell you it's not about the system necessarily. It's about you. Trust in yourself. You're going to get knocked down. Just pick yourself up. Yeah, there's time where luck needs to come along with it. Again, make sure you journal. Don't panic. When you're on tilt, recognize you're on tilt. Go through that exercise. You got this, right? And then start breathing and take care of it. Cultivate that self-awareness. You have to have that, environment of discipline, and we can help you get into that state. All right, let's shift gears now. I want to go into probability stacking. I want to talk about Bayes' theory of conditional probability. There's the fancy formula there. Real basic. This is what it means. When you take 2 independent successful probabilities and you put them on top of each other, you get a higher level order, or a higher level system that has even a higher level probability. So let's just talk about, some of you may know about harmonic patterns. I heard earlier that, the Gartley was mentioned before, or the butterfly, but you got a harmonic pattern that has a certain level of success. And some of you may have heard of Elliott wave. So let's say you got an 80% harmonic pattern and a 75% wave counting Elliott wave process. Put them together, they become a 92% probable system, just because they both are high in their own right, and when they're combined, they're 92. So if you take that and then you put it, say my trigger system, And I just said 75 to make it low, right? Let's say you got a 92% system, then you throw in a 75% trigger system. Now you got something that's operating at a high level, 97%. You still got to manage it. Doesn't make it an automatic, but it does put the playing field in your favor. And that's just an example of putting 3 independent systems together into one system. So here's an example. Took this picture last night. This is an example of the 2 working together. Here you have a butterfly pattern of some sort, and I don't really care about the names because I have computer software that handles it for you. But you have this pattern that looks like a butterfly, and then inside the pattern you can see there's various levels of Elliott waves. And today's not about teaching you how the harmonic pattern works or how the Elliott waves works, but it's just to show you the concept that here's a situation where you have a high probability for a move down to those various Fibonacci levels that are measured from point 1 to point 2, red 1 to red 2, so the bottom center to the number 2 that's up there on the top. 38% would be a first target, 50% would be a second, 61 would be a third. And this is based off of how these patterns works and the probabilities that I talked about. So there's a high probability that that level is going to be reached in the coming days. We already hit the first target, and now we're ready and waiting for the targets 2 and 3. So that's how you could put 2 systems together. And the systems are coming off of the symmetry, or the harmonic pattern point D, and then coming off of the Elliott wave, trading towards wave 3, which they made that move last night, and which is part of another sub wave 3, which trading the third wave of an Elliott is a good thing to do. And then this would be an example of a trigger mechanism. So this would be my fractal tool. Again, not here to teach you about the fractal tool, just to show you an example. All those white little arrows, those would be independent entries that are, automatically signal generated from the fractal tool. The ones with the big white circles around them, those are entries that are based off of, again, a system within where you're getting some of that order flow that was talked about from Adrian in the earlier, that what looks to appear to be a MACD on the bottom of this is a MACD, but it's not a MACD of the price action. That isn't a MACD of the order flow they were talking about on 3 different time frames. So where you have that big circle would be an example of where order flow is favoring the trade, and it's also favoring some things like extreme ticks, where you want to get in on a high thickness range and sort of things like that. Again, beyond the level of this teaching, but you combine these type of automatic signal entries on top of some market structure analysis that's already high probable, then you can see how you can start get confident in your trading. And again, this was just a screenshot from yesterday or the day before I put it together last night. So you see these type of opportunities all the time. And when you're not worried about, trying to figure out, should I be trading this level or that level, but you're actually spending the time on bigger picture analysis and having your emotions right, it puts trading at a whole new level of, I guess, awareness is the best way, helping you be aware of the market before the market gets there. So I'm going to shift gears now, and I'm going to talk a little bit about inflection points and the trading levels that I believe Adrian also spoke about in the first presentation. And my question is very simply, if you knew with a high degree of confidence, where the market was likely to react, do you think you'd be a more profitable trader? I think most of you are probably sitting there shaking your head, yes, okay, and this would be an example of our inflection points. These are levels that show up on your charts. If you have a Ninja Trader in this example, they show up on your charts daily before the market opens. This is looking at a week long of crude. Now, these charts look the same every week. This was taken before my last presentation, so I'm not sure exactly the date here, but looks like it was back, might have been a picture from March. But anyway, what you're seeing here is you're seeing some gray striated bars. Those are areas that you expect the market to react to. And then you see kind of bigger boxes, kind of a see-through opaque box. That's kind of the your expected range from a high to low on the day based on some volatility. And then some other little things you see there is just maybe a half gap trade and a gap. Incidentally, one of the bonuses I'm giving everybody that's on this, I have a gap trading system, if you will, that can teach you about when to trade a gap and when not to on a high probability gap standpoint. That whole trading plan will be part of a free download with also a special candle type indicator you can use on an older version of Ninja. But I'll tell you how to get that in a second here. But anyway, it was kind of a trick question because just knowing these levels, is not enough. Now, if you watch these levels for the last 2, 3, 4 years and you see that, yeah, the market does react to them, that's fine, but you still have to have a reason to trade at that level. All I tell people with support and resistance and any type of support and resistance, these are multiple support and resistance that come from multiple time frames and multiple indicators and all kinds of things that lead to me having these levels. But it really comes down to these levels are where you sit up in your chair. These are when you get hyper focused. These are when you take notice. Then you got to go to the order flow and the other things we talk about. But knowing where these levels are in advance, you know when you need to pay attention, and you can see on these charts, obviously, when we hit these levels, things react. And we give these levels also on a weekly basis. So you get them on a Sunday for the whole week, and then you get the intraday ones. So, and again, we just use multiple time frames and multiple techniques to come up where these confluence zones are. And what we're doing is we're looking at the various pivots, and we're looking at Fibonacci levels, and we're looking at Gann levels, and we're looking at fib projections, and we're looking at physical turning, we're looking at arbitrage points. We're taking all this stuff that any one trader might say is their thing, and we're taking all of them and putting it together, and where they have overlapping zones, we're saying that's an important one, that's an important one, that's an important one. And it comes from if you have 4, 5, 6 type people all looking at various techniques that are overlapping, probably going to be a pretty strong area. And we call them inflection points. Right now we do them for 5 markets: the ES, the Dow, crude, gold, and bonds. Pretty soon we're going to be doing NASDAQ, Russell, and the Euro. So those are there, and we can give you more information on that down the road. And this is, again, looking at kind of that signal pattern, but this is looking at like an Elliott wave, right? So Elliott waves moves in cycles of 5 and 3, and I keep it real basic, just 5s and 3s. And you can see 5 waves down, that's the white lines, 3 waves up, that's the gold line. The gray lines there are our trading levels. So you can see just coming off this bottom, you got a automated signal that's hitting right at the level. You see a nice pull up, you see a nice pullback to this level of support, and there's a high probability trade taking off on the end. And you can see it coming down. You have signals, you come in, you break through, acts as resistance. And it's all about understanding where you are in your structure, where you are in your wave count, and then what's in front of you from a support and resistance standpoint. Again, now this is a little older. This is one that from my last presentation when I took that shot of crude, but I just wanted to remind you, you can operate on a smaller account. Here's a situation where you get, 24% in 3 days. So there's $3,500. This is doable. And again, if you're trading multiple instruments, multiple size, for us, we like to keep a $50,000 account. You trade it, you take your money out, and then you just, you pay yourself, you keep your account. So here's some books I want you to consider. Everything that I've talked about, you can find in these books. I've read these books and hundreds of others. But if you want 4 good points that can take about all the things that I've talked about in this presentation, you can read each one of these. The Hour Between Dog and Wolf, fantastic on psychology and how your body reacts from a chemical standpoint. R.N. Elliott's Masterworks, that's going to teach you a little bit about Elliott Wave. Mind Over Markets, that's going to teach you about volume profile and market profile. And then Fibonacci Applications, that's going to help pull together some Fibonacci techniques and whatnot. These are great books if you want to go at it on your own. Obviously, going at things on your own just costs you time. And we want you to have confidence knowing that you're on the right side of the trend. We can help you. We can help you improve your trading esteem. We can help you with signals. And, you don't have to be ashamed of your trading. There's no more hiding your results from your spouse. Learn to be open. As soon as you start accepting these things, the better you're going to be as an individual. and you don't want to have guilt around your trading. There's a process to get you where you need to be. And I like to use computers. I like to use software, let it do the heavy lifting. It frees me up to be more aware of what's really going on, okay? And I'm just going to say this. Now, I have other areas for you to be in touch with me, but I am looking to do another 10 traders. This is my 12th week. I'm just graduating my first 10. And again, this is something that we need to have a conversation. I'm not just going to let you pay and come in. We have to make sure you're a good fit. So there's a form I want you to go to, and we'll have a phone conversation. I'll give you your first coaching session free. And then there'll be another 12 weeks on top of it if you end up joining up with us. But basically, the first 4 weeks is going to be around your trading, your mind, your body, your spirit, and your productivity. Not even going to be getting into trading for those first 4 weeks, but what we're going to be doing is we're going to be preparing you to have the trading mindset and everything you need. So then the next 4 weeks we can spend on structure and how you need to put some of these high probability systems together into one, understand how the markets really work. And then the final 4 weeks, we talk about how to actually trigger in there and manage those trades. So I am super proud of this. I'm going to be singing it from the rooftops. It's the best thing I've ever done in my life. And you'll be hearing more about it in the future. If now's not a good time for you, don't worry about that. I've created modules that go along with all the trading sessions now. Everything is brand new that I've created over the 12 weeks. I would say on average, there's probably 3 or 4's worth of training per week that goes along with those 12 weeks. That's all recorded, done in the studio, done on the screen, done with you, done with my students, practice exercises, accountability groups. Anybody that comes into this group will be put in with my other 10. I'm going to have a private members only Facebook group, only people that I've personally coached or done some sort of group coaching with. And then obviously you'll get our tools and things like that as we're going through it. So it's there. This is one of my students. He's been my student for many years. This is 84-year-old Henry. And, you know, I just want you to know you're never too old to learn, right? Henry's been trading for over 20 years. He traded on the floor in the pits. He came to me 10 years ago. Henry's come and gone, and he was never a guy that could stay focused. He was a system hopper. He would always looking for the next thing, and he kept coming back to me. And finally, I told him I wasn't going to coach him or sell him anything unless he did something like this with me. And he was one of the first people to sign up, and he is one of my biggest fans. And I just absolutely love Henry. He's living down in Florida right now, and he would always be showing up with his COVID bandana, but we met every week, and he's doing great. And he turned his trading around. I'm so proud of him. And this is Matt. He's here in the Charlotte, North Carolina area. And again, I've known Matt for a while. Matt's a sharp guy, multiple balls in the air. You can see he's got 3 youngins, but he's been able to improve his productivity and his focus, and he's running other companies. And you know, he's come a long way. We have 2 female in our group. We have and the rest of them are male. We have, like I said, from 84 years old down to late 20s. So there's not one mold that fits all. We can help everybody. And this is my last slide. And I appreciate your time. I want you to be safe during these troubling times. I can help you. And the $10,000 I'm talking about is your $10,000 trading account. Okay, I can help you survive if you haven't, you know, there's a big mental piece here, and I think you got that from the other 2 presenters. But free bonus is just go to newbie-trader.com/bonus. You can get some downloads on some things just for showing up. I appreciate you being here. If you're interested in those trading levels, the inflection points, I have a little trial you can take for $7 on that. That is a subscription service. After that first trial, feel free to go to newbietrader.com/levels, and then the coaching package, that's something where we have to spend some time together. But if the first step in the process, go to virtualwealthcoach.com, virtualwealthcoach.com, and fill out the form. It'll ask for basically your name, email, phone number, and then I'll get in touch with you. We'll pick a date and a time where we can spend about 40 minutes on the phone together, and then we'll know whether you know, if you're a candidate to move forward, then you'll have to go fill out an application and things like that. But I'll be glad to have a call with any of you, even if you think coaching might be for you. Again, it's coaching that's based on trading, but the first 4 weeks are all based on you. It's all about making you receptive for trading. And I know I started a couple minutes late and I've taken up a lot of time here, but Sherry, I'll go ahead and see if there's any questions or any way, but
I do have a couple of questions for you. You're right on time. I have Edwin wanted to know if you've heard of Elliott wave pattern, and he's got a couple others. He wanted to clarify that you do this with a $10,000 account, and he wants to know if you're a member for life when he comes into your program.
Yes, 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 and yes. It is a $10,000 account. It is Elliott wave, and yes, once you come through my coaching process, you'll be in my private Facebook group for life. You'll have all my active coaching trainings for life and any updates I make to it. Like I said, I've probably, I've probably got close to 40, 50 hours worth of stuff in there I just created during these last 12 weeks. And I'm going to continue to grow. I'm going to teach you how to be a good trader. I'm going to teach you how to be your own trader coach on your own. I'm going to coach you. And as I learn more and better techniques, from the people out there that are great at trading psychology, I will share that every way I can. Absolutely.
I'm going to do one more, and then we've got to go on to our next person. Simon's up next, and Thomas wanted to know, are the levels on software indicators, or do you have to figure those out?
No, the levels are software that show up on your charts automatically, and they're in hard page form, and there's a membership site. So no matter what trading platform you have, the levels can be, you can physically put them in. If you're using NinjaTrader right now, they're automatic, and I am working on expanding it. But they're delivered every morning before the market opens. They are software based, and it is all available for membership download. So again, thank you so much. Sorry for all the confusion. I hope this was worth everybody. And by all means, contact me on my website if you just need to talk, and we'll take it from there. Appreciate you so much.
Thank you. You have a good day. Appreciate that. It was wonderful. And now we're going to make Simon our last presenter of the day. Simon has been so accommodating today. I very much appreciate him being here with us. And let me just give you a little bit of background with Simon. He is of the Trader Institute, and his talk is going to be Increase Your Trade Probability and Success Rate with Market Maker Levels and Volume Profiles. Simon is the head trader and trading educator for the Trader Institute. He provides day trading signals, market analysis, and education. His first public class was held in 2004, and by 2010 had switched to online conferencing due to global demand. He focuses his education and training on the core of what moves the markets. We all know it's about buying and selling, so volume or volume pressure is key to understanding the markets. The market makers are the ones who control the moves, and with his dynamic math-based indicators and system, you can see the moves ahead of time. So let me just make sure that I've given Simon, can you hear me?
Yes, good afternoon.
We can hear you and we can see your screen. So I'm going to mute myself and let you take it away. And thank you again so much.
Good afternoon, everybody. It's Simon Joseph, the Trader Institute. Hope you folks are having fun. It's been a while since I did the webinar, so it is going to be, I think, a little bit of a slow start, but I've been doing these webinars for a long time. However, let's start with the website, introducing myself and the website. This is the new look for our website. To start with, I'll explain a couple of things. We do have most of our signals produced and delivered to the members via Telegram. And the Telegram is a very user-friendly software. You can download it on your mobile or on your computer or both. It's up to you. Just to show you, we have a channel for indexes, a channel that will accommodate all of you for free, which is available. Anybody wants to join us right away, just click here and you can download and you can access us for free. I have over 4,000 subscribers to this channel, and we have the elite members channel. Students mingle, chit chat, we share signals here. But if I want to have a signal delivered to you immediately, let's say on the NASDAQ or the indices, any of the indexes, it will be here. Gold or metals will be here. Forex or currencies, whether futures or Forex, will be delivered here. Oil and nat gas or energies here. Bitcoin here. So we don't do a lot of Bitcoins, but whenever I get a signal, I deliver to the members. So just to let you know, emphasizing on the fact that we have unlimited free trials. You can go ahead and click and join us whenever you want. Okay. Also, you can find a little bit about my recent case with the CFTC, which is finished. I'm glad. Took 4 years of back and forth, but it's finished. I'm glad. Testimonials, all of them made by members, students. Anything you want to know, it's right here. Also, a lot of education on our website for free. You can click on the education tab right here. One thing the previous presenter mentioned was the trading psychology, which I highly respect and highly emphasize on. So we have a video for you that's been, I think we did this in 2013, 7 years ago. A professor, a doctor came in and he gave us a webinar called Adult ADD and How It Manifests Itself in Trading. I used to say this, but I'm not really joking about it. Unless you're getting married, you need to watch this today if you have not watched it. Okay, so this is the webinar. We have a similar webinar that was done 3 years after that in 2016, same doctor. Okay, Kenneth Reed, Dr. Kenneth Reed, very highly respectable doctor. So you can do that. We also have, our method, different videos about us, about the method, etc. So please go ahead and go to the website, mark it, and go through it. Okay. The other thing is that when I started years ago, let me just go through this just quickly. When I started years ago, this was how I started in 2001. But the tape and order flow was my main thing. I was one of the first people who actually depended on this. Moving forward, years after and now, I simplified this method tremendously. It's been simplified. You don't have to look at the tape. I simplified it, and I will show you. My job will be today to educate you and show you a few things you might like. I developed a price magnet, end of buying, end of selling, unfinished business, capping, traps, point of control, etc. I'm talking about, folks, almost 20 years ago, 19, 18 years ago, I did all this. Okay, and in 2003, 2004, I used to teach. This is not me. This is one of my helpers at that time, Ian. I used to teach in a classroom style setup locally. This was me long time ago. I look different now. This was in Denver about 9 years ago or so. This was in Vegas. I did webinars. So I used to do a lot of classes. Not anymore. Online is the best. And we will go over the testimonials maybe later, but for now, let me just cancel this for a second. How do I cancel this? Yeah, and show. All right. So that being said, we are gonna focus on what matters. Okay. Again, trials are there, unlimited trials. You can join us. You can talk to our sales manager. He can give you trials, but access our free channel. The free channel that we have, folks, is right here. Welcome to TTI. Once you join us, you will get to this channel. You will be given signals. You will be given market directions sometimes, but we can move you to the rest of the channels after, okay? Not a problem. As long as you request, we will move you to the rest of the channels. One thing you need to understand that volume profile is a continuation of order flow method that I created a while back. So Then I move to volume profile. I use Sierra charts, although Sierra chart has its own volume profile, but it's not dynamic. So I created with the programmer, I created my own. We call it TTI, the Trader Institute VP, volume profile. And you see it, the volume profile actually, you see how as it expands, you can minimize it. You can sharpen the edges. You can actually smoothen the edges as well, as you see, as you like. You can change colors if you want, if you go to the setup, etc. And today I'm not going to talk about all the indicators that we have. I'm going to talk about 2 indicators only, which are very important, and these are the main ones. One of them is the volume profile, which I mentioned. The other one is this magenta line that you see on all the charts. Also, pay attention. This is the NASDAQ, but this is the NAS 100. This is not the futures market. This is NASDAQ and the CFD. At the same time, I have the NASDAQ and the futures market. Same thing. So this is NASDAQ in the spot market, NAS 100, okay, or this is a 120-minute chart. This is a 120-minute chart for the NASDAQ NQ futures. They go exactly the same way. So if you're trading futures, Forex, or CFDs, no problem. Same method applies. Actually, in fact, I call trades on all of these, okay? Now, how does this thing work? First of all, the volume profile is an accumulation of the volume historical and current. So if I want to see, for example, volume that is related to only this much move, you will see this much of volume profile. But if you want to condense it, you will see a lot more. You see right here, you see a lot more. If you condense it, you see historical. Now I see the volume that has been going on. If I go to NAS 100, you will see the volume that is going on throughout this whole move. Okay. The other thing is your magenta line. This we call SAL indicator. SAL indicator is Simon's attraction levels. These levels are not made by me, folks. I discovered them and I put them simply on an indicator that my members, my students, and I can use them. And they are extremely, extremely accurate. And I will show you some of these trade calls that we've made. This is the NASDAQ 100, for example, but if you put them, you can put them on the futures market too. You can scalp every single level of these. And I did a scalping lesson yesterday to the members, and I recorded it and I shared it today with them here. Where is it? And because I do lessons too, we do live room twice a week, and I'm thinking to increase it to more. Where is the lesson that I shared with members today? Here. I said, in case you missed my live scalping lesson yesterday, here's the 25-minute recording. Okay, we scalped the ES during the live session. So how does this work? The SAL indicator. I'll be very brief. Right-click, you go to studies, you add custom studies and then you go to Simon's attraction levels. You print it here. You go to Simon's attraction. You want to choose how many levels you want to see that the market makers or the banks are putting there. Up to 50. You can do up to 50. For today's example, I put 20. So I have basically 20 levels right on this chart showing me hidden orders or volume that is pending or waiting there for us. Okay. Sometimes you see these levels change. Why? Because let's say you have 50,000 contracts. See, one of them just appeared here. 50,000 contracts sitting here, and all of a sudden they were pulled. You will see them going away. Why? Because another level comes up that is higher than this, and it will just change it. You can put up to 50. It's up to you. How does the whole idea that I have works? In a simple way, folks. It's a very simple method that I can put it in a where is it? I can just present it to you in a very simple way. First, let me show you a call that we've done. and I will explain to you what happened. Let's go, simplest thing. Let's go to this one. Before I go to this one, I'll say this was June 15th, 2 days ago. I said, I know we exited the CAD. I called the CAD short earlier. Okay, we exited the CAD with about 200 ticks profit, but it did go. And but I see my final designed target hit. So I called the CAD short from this line. When I say I called it short, folks, I'm not making this up. You actually, if you scroll up, you will see it exact. You will see the exact call and the exact timestamp on it. Okay, you will see, for example, this is 10:04 a.m. Okay, so the call is made, and I cannot hide it or I cannot deny it because there's a call and there's a timestamp and there's the date. And there are people seeing it. See, 51 students saw that because I have people who actually trade Forex with us. So I called the trade short from this price all the way to this price. But we exited somewhere in, 3/4 because I expected it to bounce. So I said, you guys exit. We had 200 ticks in profit or 180 ticks in profit on that runner alone because we do 3 contracts. Okay. However, the final level on the CAD was hit. If I go to the USD, if I go to the same picture, I'm sorry, my mistake. If I go to the same picture, the final level was hit. Why is that? This magenta line, when I called this trade from the top, it was sitting here. So that was my target. There was, out of the 50 levels, that was the biggest level or the thickest line sitting there, and I expected the CAD to drop there, and it did drop. Okay, the mechanism or the way I look at it is this way. And this is will sum up the confusion. If you are confused, this will sum up the whole thing. The market is moving. The CAD is going, for example, down or up or moving. And it got to a point where I see some kind of a reason for it to drop. Now, I'm not doing anything random. I will look at the volume profile on the side, and I divide it into levels. So I have a level here on volume profile, and this is a level that I usually call continuation. Continuation. Okay, and then I have another level here, different level, and I also call this continuation. And then I have another level right below that here. It's called continuation. Anything in between, it's rejection. Rejection. So you noticed my trade call was right from the top. So I did not call it from here. In fact, the market went up, went up, went up. Once we started, staying in this area, I called it short. I have the trade call, I have the chart picture on Telegram, and I have the timestamp. Cannot make this up. So I said, we are shorting the CAD. When you short the CAD, okay, this is in the futures market, means I am going long on USD CAD. For those who don't know the difference, okay, this is CAD in the futures market. This is USD CAD in the Forex market. This is futures. This is FX. The FX, the USD is the main instrument. The CAD is the minor, but in the futures, CAD is the major. So they go opposite, but tick for tick. So anyway, I called it short, but where is my target? My target is sitting somewhere here. Okay, because I had that magenta line that I told you. This is the major magenta line sitting right here. The market goes right to it. Of course, the stop loss is designed here, which you will notice if you join us. I don't call a trade unless I have a stop loss. Most likely you will see calling the stop loss first. I will say I have a stop loss at this price, and this is the short. Okay, so we got to a point where we had actually some rejection in the area. I called it. I said, okay, you guys can exit or move your stops, etc. But but we do 3 contracts. I call trades on 3 contracts. We take first 2 out. On, let's say, first target, I tell them you go 16, 20, 25, 30 ticks profit on the first target. So once you make your first target, your runner is now free, because even if the stop loss hits, you're still making profits overall, because it's, you know, you took enough profits. Sometimes I will tell them, move your stop loss here, move it here, move it here, etc. So now you see the idea behind this strategy. Okay, anticipate, confirm, and execute. And that was the idea behind the crude trade call. Okay, oh, sorry, the CAD, the Canadian dollar trade call. Look at my charts and look at the Nasdaq. The Nasdaq just started dropping now, right? If you look at the Nasdaq and the this has just happened now, folks. I'm not making this up. This has happened right in front of you just now. Do you see the reason why the Nasdaq was dropping? Do you see the confirmation that we get? This has just happened now. Not, I mean, right in front of this line was lower. It went up, and that created market makers' intention as a resistance. We have some support in the area that is coming up now. Okay, which you could basically look at it from this area. We have a lot of support here, and this market might bounce a little bit from here, or might bounce completely. So this area for now is the main support. It's not tradable unless I focus, unless I see it, unless I confirm it. But you have a lot of support. You see these flashing levels. Okay, these are market makers' intention. We have other indicators that we use, but at this time, this is the main thing. Okay, let's go to the SAL indicator. As I said, you have multiple levels on the CFDs. I don't know where you're located, but if you're in the States, you cannot trade CFDs, but you can have the charts. It's really a blessing to have a chart for, let's say, the Dow CFD. Why is that? The Dow CFD, which is US 30, does not expire, does not roll over. The volume is always there, the stability is there, and the volume profile will always show you the accurate picture. Because with futures, remember, at one point the current contract will thin out and the new contract will come up, and that week will be hesitant. You know, you don't see enough volume, the volume is split. And it is really important for you to download this chart. There's no harm, even if you don't trade them, have them. You know, use them, just like we use them. Okay, you can. If I call a trade on Dow or US 30, you can. You know, it's a Dow, which is YM here, the YM. And talking about the YM, you see how this market, the magenta line is flashing between these two lines. It's creating some kind of support. You see this area for support? It's flashing. See this? See this area support? It's creating that. So this is not something I can control. This is market makers. It's very hesitant now. The market is confused, but it's creating that support. Similar to the Nasdaq I mentioned, we have support at where is it? Where is the support? What chart was I using? On Nasdaq, 120-minute chart. No, I'm using that 1597. So this is the level that I was looking for to maybe could be support here. So now I'll show you another call and I'll explain it. Maybe that will help you out. Nasdaq, what we did, Nasdaq a few days, actually yesterday, no, the day before, I called a trade which started as a scalp trade, but it ended up with 500 ticks. Okay, if you look at the indices, we're going to look at the Nasdaq. Look at this. I called it, what day was this? This was 2 days ago in the morning. Now, June 15th, okay, 2 days ago. I said Nasdaq or NQ has a great support at 90. Oh, that the audio is on. for signals. So let me just remove it. We have audio signals too for us. That comes up when the line hits. Never mind, we'll try and ignore it. Just give me a second.
We're not getting any audio except you're speaking.
Oh, good. Okay, because it was coming to me. It was confusing me. So what I said, we have 9480 NASDAQ support. If you look at the level on the 15th, which was 2 days ago, this was 9480. Okay, folks, 9480, I called it long just to show you the process that how we do it. Okay, looking for a long, if I get a safe entry. Now, what do I mean by safe entry? I see it, and I see my magenta line. I see market maker's intention to bring the market up. But what do I mean by safe entry? What I mean by safe entry, I need to find a stop loss. If I cannot define my stop loss, okay, I am not willing to call that trade. Now, I'm not shy of you. I'm not worried. I'm not going to call a trade just to satisfy you as a member. No, I got over that. I've been doing this for many, many years. I've seen so much. I will call it because I see the safety in it, and I will call it, and I will call the exact stop loss, and I will tell you. Sometimes the stop loss is going to be a little bit bigger because we missed a good entry. Maybe it happened, the spot that I was trying to catch, it happened while I was asleep. Maybe it happened overnight. So now the stop loss is a bit bigger because my stop losses are smart. I don't change them just to have a small stop. The stop loss is defined on the volume profile. So eventually, same day, look at this, folks. It's time-stamped and it's there. I'm not making this up. I said NASDAQ targeting 9880. Do you see the arrow from 9480? I called the trade because I called it really after that. I said I have a stop loss. Here's the call, NASDAQ. Okay, NASDAQ or NQ stops. I said stops are at 9460 if I see a long, and then right after 949, I said NASDAQ only valid for swing long. Remember, only valid for swing long because my stop loss was a bit bigger because my stop loss was just behind this level, and it ended up with 500 ticks move. Okay, while I was talking right in front of you now, I mentioned about this line, the NASDAQ. See how the NASDAQ is hovering in this area? Although this is not a great time to trade it because of the market's confusion. It's a late afternoon. But look how the NASDAQ bounced from this area. Okay, this is something that once you believe in it, once you see it working day in, day out, after all, you're in for a free trial and unlimited trials, you will automatically see this and you will believe it, and it will help you make it in making your decisions. If you don't see it, you can't trade it. You are not going to trade it. Okay, so that's what happened, folks. The market went for 500 ticks move in one simple call. How did I call that? Let me just explain one more lesson for you, folks. I will do it right on the chart. Now, this is the view that the NASDAQ was coming into. We see everything clear, folks? Here, this is the view initially. Sorry about this. I have to go this way now. This is the view. 9480 is basically somewhere here, right? This is 9480, isn't it? 9480. So ahead of time, I said 9480 is my support. Now, that way, folks, understand that I just anticipated the move. Anticipate. What am I waiting for? I'm waiting for confirmation. So anticipate, market comes to it, no confirmation, no confirmation, no confirmation. It comes back, it breaks it, still no confirmation. When it started breaking higher, see this? It confirmed with the magenta line. This is when the biggest confirmation comes along. And this is when I called it long. So I confirmed, and then I execute. So you see it spells ACE. The ACE strategy has been with me for about 18, 17 years now. I've been following the same strategy: anticipate, confirm, execute. If I cannot confirm a trade, I will not call it and I will not take it. All right. So moving forward, you will see also on the same day, look, US 30 or the YM, which is the Dow. The green box, I said, was my support since last week. So if you look at this area has been sitting there. This green box has been sitting there for a week, anticipating the support from this area. And look at the arrow. You see this? This is a picture, a snapshot that was taken the 15th on 9:44 a.m. 2 days ago, 9:44 a.m. And the market finally comes back to the green level, which is the green box, which was basically this green box right here. You see this green box? See it right here. It comes to it. Now, not only I anticipated the support. Again, anticipate, confirm, execute. You cannot change the system because that's the safest system. And then I say my target is 27,200. You see, that's basically, folks, over 1,000, 2,000 ticks. Look what happened so far. It did go about from 24,400 all the way to 26. It's already gone 200 points. Okay, that's 2,000 ticks already for a swing trade. So now I specialize in swing trading and long-term trading, but we can also do scalps. You can learn how to do them. I personally don't do them, and I personally don't call them. I can teach you, because by the time I will type it and share a picture, the scalp is gone. But again, I will teach you how to do them. It's a very simple process. If you have the stomach for scalping, you can learn it. Okay. Now on my website, I put we are looking for 1,000 ticks a month. When you are looking for swing trades, big trades, 1,000 ticks a month is not really a big deal. Honestly, it's not a big deal. It's very achievable. Why? Let's say I don't have a trade on NASDAQ or on the S&P. Look what I have. I have silver, I have crude, I have gold, I have nat gas, I have euro, I have Canadian, I have Bitcoin. You know, you look at different things, multiple things. Okay, one of them or two of them will be ripe for that specific entry where the market will bring it up or down to this level that you're looking for. The market will give you that ahead of time. Okay, on pound. Look, pound. If you're trading, by the way, Forex is not very popular yet amongst my students and members, but I have 93 subscribers. These are lifetime or permanent members. These are not trials. The trials only are on the TTI, 4,200. So on Forex, which it's new, on Forex, look on pound here. What day was this? Let me see. Give me a second. I will know. This was June 15th. Again, 2 days ago. Do you see this arrow? I said I have a pound long and I want to get to this level. To this level, which is it's there. But before that, actually, I showed it here. Okay, here. This is the original idea. See where the pound was? Right at the bottom. take a mental picture of this, please. The pound was right at the bottom. I said, I want the pound to go up to this level. Okay. This was a day before. The next day, which was June 15th, 2 days ago, already gone up. I missed this, and I was clear about it. I said, pound gave a good entry overnight. I wasn't watching. I was asleep. The pound, moved during the London session. So it's not a call, unfortunately. Now, it's not a call that I could basically manage for my members. I tell them, move your stops, but I have a lot of students who live in a different time zone. They were able to catch it. Make sense? So, but again, it was anticipated ahead of time, and eventually, look at the pound. Boom. That magenta line, it works like a magnet because it's designed by market makers. It's banks levels. Okay, I have other students that they don't use this indicator. They have their own indicators. Okay. Yeah, I had a trade. There was a question about if I can show. Yeah, I had a trade. When was it? Yesterday. I called a small trade, and it says it was stopped out. But eventually the market went in my favor. But unfortunately here, hold on. We have a lot of people participate. These are not my calls. This is students and other members. This is for elite members. But I mentioned something, if you see here, yesterday, I said, if you noticed my ES call, Alberto, or SPX trade 20 minutes ago was stopped out as I established a stop loss with the call. When I call a trade stop loss, it's established. But then I said, if we have left it with no stops, we could have made some profits. But that is the worst habit you can pick while trading. Don't tamper with your stops, especially when you're with me. Accept the losses. Why? Why am I saying that? Excellent question, actually. I love that question. Why am I saying that? Remember I told you about the zones or the volume profile zones? Sorry about this. Let's do this. This was my ES call. This is the zone, and I had a zone, I had another zone. And I will teach you all this with my method. So the ES comes back, the ES comes here, and I call a trade from here. Now this is continuation. This is continuation. Please pay attention to this lesson. This is very important, and I can break down the education in a way that you can understand it this way. And this is the rejection zone. Now, if I call my trade, I'm looking for the ES or SPX to go long, and we had a target in mind, which is hit by the way, but after it took the stop out. Now, if I'm calling a long, where do I call my trade from? Remember, this is the rejection, right? Am I going to call it from here? Red, green, or I would say blue? I'm not going to call it from the red. Why is that? Because it's a continuation zone. It might continue all the way down, and it might go through all the way to the rejection zone. So if I call a trade from here, guess what? You see the purple line? My stop loss is here. This is my stop loss. This is my stop. Okay? So I would wait for the green to hit this green area. Why? Because I want to have the least amount of risk for my trade. And that's how traders succeed. If you are patient enough and wait for it, unfortunately yesterday, Mr. Powell was talking, and the market went down. ES, went down fast, it clipped the stop, and then it started moving up in our favor. Okay, but that was a stop out, and I'm not shy of doing it, because look what one of my students, what he said right after that. He said the stops are tight, so a huge runner will make up for many of these small stops. Although we don't have many of these small stops, because I don't call many trades. I'm not the person who would call 5-6 trades an hour. It's 1 or 2 trades a day, if the market gives us that. But so far for the month of June, I called out trades for maybe over 3,000 ticks. Okay, now you can find out by joining us. It's free, it's unlimited, it's right here. Join us and come and be with us. You have the link on the website. If anybody wants the website again, it is thetraderinstitute.com. Okay, you have Sherry has a file that was shared with all of you. Okay, she will give you that. It has the website and other information. But once you join us, folks, once you become a full member, I'm not selling anything now, so I'm not going to tell you anything. You come in, you talk to Daryl, you join the trials, you don't like it, you leave. That's up to you. Once you join us, there's a step-by-step members area. Look, level 1, level 2, level 3. For example, level 3 of this, we have crash course on volume profile. Very important. Level 4. Okay, no, level 5, the ACE method. Look, we have 3 videos. Level 6, top-down analysis. Okay, and I have recorded trainings. So we do have a lot of information. What makes me comfortable is that I have 2 days a week where you can actually join similar GoToMeeting, similar room that we have now, similar software, and you can join and you can see me trade, you can see me take questions, you can see me do my top-down analysis. So the other days will be, I'll do my top-down analysis and I'll give it to you on Telegram channel that you can receive. Okay. Any more questions about trading? Now the other thing is, there are trade calls that or levels that I saw and I called. It took a week or 2, but then eventually the market went to them. Okay. Eventually market went to them on gold. This was my gold 1670. If you look at the gold, just give me a second, I'll find it here. If you go to the gold channel, hold on. Look, you see this? This was a level that, although the magenta line was above, but the magenta line was already touched once. Pay attention to this, please. This is the previous support and touched multiple times here. So what I say, because I know how the volume profile works, and I will teach you that, I did not say 16 or this level, which was maybe 1700 level. I said 1670 level, which is below 1690. I said 1670 area is a support. Okay, and then it came to 1672. I said long at 1672 or better, and I said stops at 67. So I gave you the entry, 72 or better. You see this? I gave you the stop loss. Look at the move. From 72, it went all the way to 74 and change. 200 points, 2,000 ticks. That trade call alone. So The idea is, folks, is if you join us, you learn this. You can use it for scalping, swing trading. If you have a smaller account, maybe you can use micro or mini. You can use CFDs. You can do spot. But the idea is, folks, if you have something that works for you, do that too. You don't have to focus. I mean, this doesn't have to be 100%. But if you really have been struggling with your trading throughout the years, I want you really to pay attention to this. Okay, it's really important. It's really the key behind understanding the market and how it moves. Look what my some of my members would say about this. Just a second.
Simon, we had one person asking, he says he's in all the chats except 4X. How would he find that chat?
Email me. I'll
Email
take care of
time.
that. Yeah,
Okay,
yeah.
cool.
Email me or private message me on Telegram.
All right.
That's
And I
also,
dropped
yeah.
that one question from Alberto in because I was afraid I would lose the context of the question he was asking you about the 3 calls that were wrong and how to manage them. So I appreciate you taking that on the fly.
No worries. No worries. I don't prepare my webinars usually. This is the best I did. I usually do them raw, live. John says, when you're trading and watching your normal charts with lagging indicators, often the market will reach a point where it does something you just can't understand or predict. Using volume profile, the way Simon does, gives you a window to otherwise hidden current that drives the market. Quit reacting, he says, what he's trying to say, but be proactive. You have to anticipate the market's move, really. If you cannot anticipate the market's next move, it's not going to be an easy thing, really. It will not. Okay, and I do have a lot of testimonials. I don't think I will have enough time to cover everything, but again, free trials available to you. You will see here, says his methodology and training techniques will not disappoint. Okay, with years of experience in the market, Simon has perfected his entries and exits. Perfect. That's a perfect explanation. If you cannot perfect your entries and exits, or you cannot estimate the market's support levels and resistance and targets, you are not doing yourself a favor. You have to learn that. You have to understand market's next move. Now, learning the market's next move is the easiest thing you learn with me. The rest will be how patient are you to wait for it, and how patient are you to execute these trades. A lot of people suffer from that. Remember, the previous presenter talked about psychology, which I really liked it. Psychology is a huge part of what we do. I can teach you no problem, but the rest is up to you. Okay? A lot of students have been following my trade calls. A lot of them. They didn't even take the time to go through the members area, but now they're coming back. They're saying, you know what? Yes. What if you quit one day, or not quit, but retire? We're getting older, right? 10 years from now, 5 years from now, whatever. What do? We need to go back to the members area. Can you reissue us the access? Of course, it's unlimited, or it's permanent membership. You get your membership and that's it. You don't pay again. Look here, China says, know your stops before entering the trade. Be patient and wait for the setup. Stop loss are the main thing that if you see them ahead of time, you will know if you've taken the trade or not. I like this because I need to explain this, please. This is the most important thing that you need to know about trading. Of course, when you trade options, which we can use my strategy for trading options, and I'll explain why. If you have an entry here, remember we talked about the zones, okay, trading zones. Your entry is in this area, for example, right? And you decide to take the trade from here long, for example. Folks, your stop loss is all the way here. And you know the stop loss is here. Why would you take trade from here? Some of you will think, but what if it doesn't come down to this level? I will miss the trade. Absolutely miss it. To hell with it. Don't worry about it. Look at a different instrument. And that's what I try and print into my members' brain. If it doesn't come to the level that not I'm giving you the level, the volume profile and the SAL indicator and the method that we have will give you these levels, not me. Then don't take that trade. Don't even bother with it. Do you know how many trades went 5,000 ticks, 4,000 ticks in our favor to the target that we assumed ahead of time, but we did not get a chance to get in because it did not come close enough to our entry levels? Some people will execute that trade with options, which is completely different ball game, but it's safer because you don't have to have an exact stop loss. Okay. Again, let me emphasize on this. All the time goes back to the same slide. I don't know why. Okay, how much time do we have?
We're right at the end of the time. I'm totally fine with going just a little bit longer. I wanted you to know that I did put in the handouts section. I put your PDF. I also included the link to it in the chat. So
beautiful. I am actually done, but I want you to join the trials. It's right on the website. It's unlimited. PM me, private message me, private message Daryl, anything you want. You can do binaries, you can do CFDs, FX. It's a method, it's a trading style. It's not just one thing or two things. It's a style that you learn and you apply to anything you want. And we do accomplish over 1,000 ticks a month. Okay, so for this month already, we are over 3,000 ticks. Now, in terms of keeping track, I don't keep track anymore. That's why I'm giving you unlimited trials, because I am doing CFDs, Forex, futures. There's no way I could keep track on all these, okay? No, not logical. Sometimes I will call a trade, our students will be in a trade, I'm not even there. I'm not even in it, okay? So the method, what matters, and I'm here if you have, if you need anything. And I thank you for your attending. Appreciate it. Thanks, Sherry. Thanks, everybody.
Thank you.
Hopefully, we'll see you in our trials.
Thank you very much. We'll be in touch. I'd like to thank everyone for staying on the webinar with us today. I want to remind you that we will have the replay up. And also, I want to tell you that we'll have our next webinar on July 8th. So if you enjoyed this webinar, please keep an eye out for our emails, and also feel free to forward them and invite people you know would be interested in this. I'm also always looking for excellent speakers, so be on the lookout for that as well. Thank you, everyone, and I hope you have a wonderful day. I'm going to share my screen. Come back to me. I have, let's see. And I want to show my other screen. So our recording is going to be available at tradersexclusive.com, and we would love to have your feedback as well. Thank you, everybody. Have a great day.